So once again, that secure network, secure platform, especially when you're talking about mobile financial services and you're dealing with people's money and taxes and how you tax and all the different regulations, etc. So from Ericsson's perspective and what we do today, we already provide that platform in Africa. We've got 100 million people on that platform in Africa today and are managing that data and that connectivity. So our mobile fintech network platform does that today. And that's a key thing. So it boils down to that digital identity or the KYC. That's where it all starts. Who are you? Who do you know? From that comes a trust score and a credit score. From that comes a whole evolution of how people get access to microloans or basic financial services. And then from that comes the evolution towards, well, how are we going to fund this little startup? And I'm also going to bring in a point here which I think is really important. Trusted multinational companies like Ericsson, can also bring to bear some of its experience in this world too. We would want to be partnering with those really great fintech ecosystems or those really great startup ecosystems and bring our expertise and bring our engineering expertise to empower those ecosystems also. But it has to be off a stable technology platform, and that's a really key thing. And from that also, a stable policy and regulatory environment also across the continent.
But you see, Michael, I have a problem with certain things there. You talked about 100 million data points, for example, on your system. And I think Kyle also mentioned the fact that how do we start to liberate or democratize access to data for decision-making purposes? How do we get access to that data? How do small businesses leverage that data, build network effects, and get access to that data? So we're not rebuilding and we're not fragmenting further than we're already doing. How do we harmonize everything? Because one big market, right? That's also one data market.
Yeah, so I mean, once again, it starts off with the policy environment. And what you have now, I can see, is quite a fractured environment where there's lots of different markets across Africa. So how do we connect them? How can your individual credit score be connected in from Ghana into Kenya, for example? Very simple like that. Or a small to medium business. That's a very crucial thing. Or an agent who's doing some business. How does his goodwill and his good work be recognized in different markets if he wants to trade with someone in a different market across Africa? So, I do think it needs to be in an environment where, off the stable platform, you can leverage that to access your customers or get your customers connected to other customers. That's a really, really, really crucial thing in a very secure, stable environment, which I think that we provide. But I think from that perspective too, it's also important to open it up to all the small fintechs or innovation that's happening off that too, to bring them on board. But it needs a stable policy environment that's open to the whole market, not just a select few.
Okay, great. Thank you very much. So I think, ladies and gentlemen, what we've been talking about is we want to drive innovation as a continent, but to be able to do that effectively, we need the right infrastructure. We need the right infrastructure that's also affordable, right? Because again, it's not, if only 20% are using it optimally, then it's really not good for anything, and then it doesn't bring a return back. But we also need the investment to be able to put the infrastructure in place, as well as the investment to drive the innovations and the digital solutions development. But finally, innovation is only effective when it impacts people and changes lives. So how are we going to put it to use? And I'm going to start with you, Carl, just very briefly. How are we going to put it to use to ensure that it changes lives of underserved citizens, persons with disabilities, women? How do we drive this digital economy to ensure that no one is truly left behind? Let me start with you, Carl.
It's already happening. And so it's just, how do we keep this trend moving in that direction and move it faster? Okay, and that's where, whether it's, I mean, you think of where payments, how the way we used to do payments 15, 20 years ago with Western Union and all those fees and all those difficulties, and now just tap, 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 boom, it goes. Okay, but now you know, now at the farmer level, the rural stakeholder level, things like digital insurance coming into place, weather insurance, that's going to transform farmers' lives, and particularly local farmers or shea nut collectors that are primarily women, that now they can insure from the weather. That was unheard of 10, 15 years ago. So that whole digitization going out to that last mile, for lack of a better word, I think is going to change people's lives, particularly at the bottom of the pyramid. And that's going to make a better society for all.
So it's basically economic inclusion to improve livelihoods, and then we can piggyback them onto the mobile platform, and then they have digital financial services as well, right? Benya, your thoughts on that?
Sure. For us, what we focused on is helping those early stage companies that have caught fire somehow. Again, we don't claim to be the ones who can pick the winners or know which one's coming next, but when we see that a business has actually really caught fire, I mean, I think examples would be M-Kopa in Kenya, or MoneyPoint in Nigeria, Copia also in Kenya. MNT in Egypt, all of these, what happens is they get to a point where they've been backed by those visionaries, and they need to scale. And so that's where we get involved. Okay. And I think the second place where we're really trying to be involved is in creating the spaces where they can convene with other entrepreneurs like themselves. So you can have these spillover effects. And because you see that these serial entrepreneurs, they start in one of these fintechs or other technology startups, and then they go and they start their other ones. Mm-hmm. And if you have one physical or multiple physical spaces where these people can convene, our vision is to create the Silicon Valley or the Shenzhen of Africa, in Nigeria, in Egypt, in Morocco, in South Africa.
Okay, great. So from the investor's perspective, how are your small businesses, and how are the angels also looking to scale? Because that's what I'm hearing from Kyle as well as from Benya. How are we going to scale this thing?
Well, from our perspective, one key important element that drives our vision is that we are very innovative as well. As much as we're financing and supporting innovation, ABAN and angel investors on the continent remain extremely innovative. So for the past 2 years, we have launched Catalytic Africa, which is a matching fund instrument that co-invests with our angel investor and de-risk the exposure into transaction at very early stage. And secondly, we have been deliberate in supporting female-owned ventures. So we have also created a co-matching fund for female-led businesses, matching the exposure of our female angel investors. Okay. And thirdly, consolidation is very important. Recently, we launched our first SPV in Rwanda, which is a cross-border SPV, pulling capital from various angel investors from multiple jurisdictions and invest in companies no matter where they are located. So we have become, we are innovating as we grow. And we're also welcoming other founders, funders, to join us on this journey, because an innovation company, a venture, requires a multiple funding model. Mm-hmm. It's not only angel investor, they need VCs, they need banks, they need other type of funding partners to support the growth journey. So in terms of inclusion, and I just keep on saying that, the biggest thing that we have done is moving from sector agnostic to sector specific, to refine expertise, and to make sure that we are able to create clusters of individual investors that are focusing on specific sector beyond fintech. Okay. We're looking at climate smart agriculture, we're looking at digital trade, we're looking at clean technology, we're looking at creatives. So it's really giving opportunities to all the entrepreneurs out there, building companies that are tech-enabled, no matter which sector you fall into, but know that ABAN will be there as you start your journey.
Great, thank you very much. And Michael,
finally last comment.
How do we ensure that this actually spreads across different sectors? Because we've talked about the agri-sector, e-commerce. How do we ensure that we're truly creating a global platform that we can leverage on and work together on? Is that something you can support?
You took the words right out of my mouth, and I don't want to sound like a stuck record, but yes, build off a really stable platform, I think is key. But let's bring it down to the very basics. For me, I see it's Africa's solutions for Africa's problems, built off a very stable platform. And, you know, it's really important to partner with the right people, you know, to do that. And, you know, there is that innovation that's happened at a global level, but if we can bring that innovation into Africa, but then have Africa solutions for Africa's problems built by African people with African capital, I think this is the holy grail, and we would be very proud to support that moving forward.
Great, thank you very much. And we can say that this was birthed at the 3i Summit in Accra, Ghana. Ladies and gentlemen, my time is up and my compare is at the podium. So I would want to say thank you very much to Benya, Kyle, Michael, and Fadila for their insights. And thank you very much to you as well for being a very attentive audience. Have a good day. Thank you. Thank you.
Ladies and gentlemen, by far the most masterful moderator, 29 minutes and 29 seconds. Please, a round of applause. We now move to the next segment of today's engagement, where we get to hear about empowering the underserved. Most of the conversations have been surrounded by or focused on those we're serving, but let's take note of those who fall outside the brackets. How do we get them all included? Doing us the honors, ladies and gentlemen, we're joined by the second Deputy Governor of the Bank of Ghana. For exactly 10 minutes, she would walk us through this presentation. Make welcome Madame Elsie Ado Awaji.
Thank you, Jerry. Governor Ernest Addison, and distinguished governors of other central banks present here, distinguished deputy governors also present here. A very good morning to you. It's actually very difficult to follow up on such class acts as we've had this morning, starting with the Vice President and this panel, and then all of what we heard yesterday. Much of what has been said resonates strongly with me, but I'm going to try and provide some of my own thoughts on the very important topic of how do we bring along the underserved. So please bear with me over the next 10 minutes as I share some of my thoughts. So it is obvious that empowering the underserved in any economy is critical to unleashing the full potential of that economy. It does not only unleash the potential of those actors, but also of the entire economy. And for Africa, that really holds great promise for the transformation and sustainable growth of our economies. There can really be no true and sustainable economic empowerment without inclusion of all economic actors with potential to contribute towards nation building and economic growth. Ladies and gentlemen, a key to economic inclusion is financial inclusion, providing meaningful access to finance to all segments of the population in a given economy, and doing so in an orderly fashion and in a sustainable fashion. Emphasis on that. According to the World Bank's 2021 Global Findex data, which is really the last report on this, and I believe they're working on an update, financial inclusion has improved significantly around the world, so that by 2021, about 76% of the world's adult population had access to an account at a financial institution or had a mobile money account. And this compares to 51% in 2011. And so over the 10-year period, we saw a marked improvement in financial inclusion around the world. Now, in the developing world, 71% of adults had access to an account by 2021, and so a little lower than the global average. The report also suggested that mobile money has become an important enabler of financial inclusion in sub-Saharan Africa, especially for women, and it is both a driver of account ownership as well as of account usage through mobile payments, savings, and borrowing, All of this you've heard over the last day and a half, but it's important to restate it. Ladies and gentlemen, despite this progress chalked, there still remains a significant number of people that are either completely excluded from or underserved by the financial ecosystem in most of our countries. So the 2021 Global Findex database published by the World Bank revealed that 1.4 billion adults were unbanked in 2021 around the world. This represents largely unemployed persons, low-income earners, rural dwellers, women, youth, persons with disabilities, persons displaced by natural disasters, and by climate change, war, and conflict. That's a sad truth. The World Bank also suggests, at a more granular level, that the gender gap in account ownership in the developing world was 6% in 2021, which means that more men had access to finance compared to women. While this was an improvement from 2011, at which time the gender gap was 9%. Now, what is more, the report found that more women were less likely than men to successfully raise emergency money when they were in a crisis, and they tended to rely on friends and family, which was not always reliable, in particular during a crisis. And so this really tells us what the situation is for some of these underserved groups, in particular women. Now, the gender gap in access to finance for women in sub-Saharan Africa, by the same report, increased from 7 percentage points in 2011 to 12% in 2021. So whereas the whole world actually made progress on the gender gap in access to finance by the gap dropping from 9% in 2011 to 6% in 2021. In sub-Saharan Africa, we saw the opposite. And so we saw that the gap had actually gone up by quite a large margin at the end of 2021. And this is quite worrying. Now, in terms of access to credit, the gender gap in sub-Saharan Africa is similar to what is observed in middle and high-income countries, except that more women in sub-Saharan Africa tend to rely on microfinance and village savings and credit clubs and other informal sources of finance, which actually is very costly, according to the report, because interest rates tend to be much higher. These loans are available only for short periods of time, sometimes daily, weekly, monthly, and the rates are exorbitantly high. So these provide some food for thought for us, I believe. But the good news is that in Africa, as we've all said, mobile money has been a formidable force in extending financial access to the underserved and the unserved groups. And this enables them now to make payments and save, even access some credit on the back of mobile money wallets. And basically, we're seeing that this is helping them also in e-commerce and all other forms of businesses. They're selling much more because they're able to receive payments through these channels. But this underscores the potential that we have in our digital financial services landscape to really increase access to finance for these underserved and unserved groups across the continent. I think it's worth mentioning that over the decades, governments in Africa and regulators have made strenuous efforts to address the issue of exclusion in the financial services sector. And different strategies have been used. Some have included governments themselves investing in state-owned banks and state-owned other financial institutions, and development financial institutions, all to provide more access where traditional banks and other financial service providers would typically not provide access. We've also seen that such government interventions have targeted very specific sectors like agriculture, sometimes industry, housing, and such. Now, more recently, we're seeing that governments in Africa are coordinating these efforts through more comprehensive strategies called national financial inclusion strategies that provide for more comprehensive approaches to addressing barriers to inclusion from the supply side as well as the demand side. Efforts to provide fintechs, to promote fintechs and the entire digital financial services ecosystem have been key in this regard with remarkable success, judging from the rate of success of mobile money and et cetera. But it's important to note that while we're seeing the impact of mobile money and fintechs in broadening access to financial services, there are some important points that we need to keep in mind. First of all, a lot of micro, small and medium-sized enterprises, which really form the bedrock of our African economy, still lack access to meaningful and cost-effective financing, whether it's equity, credit, and anything in between. We heard some of that from the just ended panel. Like I said, some of these tend to rely mostly on friends and family, but otherwise on more informal financial services providers who provide credit at a very high cost, making business sustainability a key problem. Now, a lot of the access we're also seeing through mobile money really is sometimes short-lived because what we're seeing is that mobile money is more a payment instrument for many, and as soon as they receive that payment on their mobile wallet or that remittance on their mobile wallet, they go to cash out and continue to transact in cash. So there seems to be a bit of a cultural problem or something else that is making these mobile money wallet holders still wanting to transact largely in cash once they've received something on their mobile money wallet. And so we need to really find out how we can move from payments into making mobile money really a consistently sustainable source of providing financial products and services to holders of mobile money wallets. Let me also add that as digitalization continues to transform our economies and financial systems, there will inevitably be winners and losers. The losers being those unprepared for or not willing to make the changes that are necessary to take up the opportunities that are presented. We saw this in globalization, right? And we're seeing this happen also with the promotion of the digital economy, where necessary changes must be made, and there's got to be trust built in these systems, but you find out that there's still a bit of a reluctance to change, to make the adaptations that are necessary, and so we need to think about how we get past all of these bottlenecks on the demand side as well. Now, let me share a few other thoughts before my 10 minutes are over. One is, I believe that for us to make a real push on financial inclusion and to ensure that the excluded or the underserved are really mainstreamed into financial services, we need to think about financial inclusion not as a fringe issue, not as a good thing to think about from time to time, that financial services providers or policymakers put in their material to show that they're thinking of this issue at least. We need to consistently make sure that this is mainstreamed into policy and regulation and in business models of financial services providers and payment services providers as well. And so this becomes then the underlying business model. How can we do business? How can we make policy? How can we make regulation that is thinking of the least and those at the bottom of the pyramid who may be unserved or underserved? I remember not too long ago when the pandemic was raging and every policymaker who would speak will talk about how we needed to build back better. How many of you remember that phrase? And so that was the caption, and everybody was beginning to understand that we needed to seize the momentum to think through how we did everything to build back better, to promote more inclusion. But as the memories of the pandemic fade, we're hearing this commitment also fade sometimes. And so it's important that we get back to it and make a consistent effort to think inclusion. Another thing to keep in mind is that, well, financial exclusion will continue to hinder effective transmission of monetary policy for as long as significant cash remains outside the banking system. So financial inclusion is important. It's important for poverty reduction, for growth, for sustainable growth, but it is also very important for policymakers to think about the effectiveness of their own policies if there is that much exclusion. Exclusion will continue to keep a large portion of businesses in the informal sector and largely outside the tax net, affecting government revenues. And the agenda, developmental efforts of governments. Exclusion will continue to leave certain economic actors vulnerable to economic shocks, like climate change, like disease and others, which would then always make our economies not grow to the potential that they could grow to. Exclusion in the long run does not augur well for long-term viability and resilience of financial institutions. And so when banks and other financial institutions think that they can focus on the bigger businesses at the exclusion of the informal sector or the small and medium-sized enterprises, well, that just means that the ultimate and long-term sustainability of these financial institutions is threatened, because then you're cutting out a potential client base that could be groomed and could be prepared for the future, which could be the future of the financial institution or of other players in the ecosystem. So it's important for us all to think about this. In Ghana, the Bank of Ghana published a set of sustainable banking principles which enjoins the banks to think inclusion among other principles in their day-to-day businesses, and we believe that this is on its way to helping the banks think a little more deeply about the issue and to mainstream this in their business models. We hope that the fintechs and everybody in the ecosystem are thinking inclusion. And we often hear that innovation is about inclusion, but when you really look at it, it is not altogether really making a dent in terms of the underserved and unserved populations. And so this is a clarion call to all of us to not only speak or talk the talk, but also walk the talk more consistently and on a sustainable basis. Now, that said, having shared all these points, let me state the obvious. Empowering the underserved should therefore be a critical economic policy agenda for all of us in the continent to enable all economic actors generate income, build assets, manage their financial risks, and become economically empowered so that together all of our contributions build up our economies on a more sustainable basis. Now, it is important as we think about this and we think about how innovation can be a catalyst for inclusion, we think about the fact that innovation in itself and investments by themselves do not automatically lead to inclusion. They need to be steered by policy and regulation to be able to get there. Innovation has been around in the financial services space for decades and for centuries. Sometimes we've seen the worst of innovation, which have ended up in financial crisis, including the global financial crisis, on the back of innovation, right? And so it is important that we think very clearly about how we balance the policy objectives of inclusion, of promoting innovation to promote inclusion, but at the same time, making sure that the financial systems are stable, have integrity, and provide real access at transparent pricing and all of that for the ordinary person and for the underserved and unserved. This is important, and like I said, innovation and investments by themselves do not always guarantee that. I believe that also, as a second point, clarity and consistency in policy and really getting the policy coordination across so that education policies are speaking to all sorts of economic sector policies, and all policies are working together to create that enabling environment that promotes sustainable innovation and investments that are steered purposefully towards inclusion. Regulation has a similar role to play. As we license and authorize new entrants and new products, it is important that we hold them accountable to doing the right thing and to promoting inclusion on a sustainable basis. Two other points I'm going to make. Infrastructure, you heard a lot of it, some of which were mentioned by the Honorable and His Excellency, the Vice President. But the key question is who is going to make these investments? Investments in digital IDs and interoperable payments and settlement systems, in financial literacy programs, and so on and so forth, and credit reporting, credit scoring programs. There is a place for public goods, for providing some of this as public goods that help to promote access and to bring down the cost of access. But often the fiscal space might not be available for that. And it's important for us to think about what kinds of partnerships between the public sector, between the private sector, with the support of development partners, and so on. How can we create investment opportunities in this area while doing it in a way that helps to promote access and do it at a cost-effective basis. Lastly, how we measure impact is going to be very important. And we often are measuring impact in terms of number of accounts open, and so on and so forth. You will find that increasingly the World Bank Global Findex report is going beyond number of accounts and looking at real usage and basically resilience in terms of how economic actors are able to manage their risks across board. When that market woman has a store that catches fire, is it insured, and can she get back on her feet soon? And really, we need to find ways of investing in the coordinated databases. I think Olayinka made this point brilliantly. Databases that speak to each other, that allow us all to understand from a policy, regulatory, and investment standpoint what is going on and how we can all work together. But also, it's important we measure impact as we bring in the underserved and the unserved. What is the impact making? Are they borrowing to gamble? Are they borrowing and not paying back and therefore denying themselves access going forward? What are the uses and what else needs to happen in the entire economic ecosystem to free up opportunities so that as they get included in the financial space, they are able to unleash their greatest potential. So ladies and gentlemen, I hope that I have been able to provide a few thoughts on this point and on this very important topic. And I do hope that in the panels and in the discussions that follow from here on, we continue to hear your thoughts on these. Thank you very much.
And so in recognition of the bank's pioneering role in promoting financial inclusion and intellectual contributions to knowledge products and policy guidelines, the Governor of the Bank of Ghana and his deputies have led the bank to win the Alliance for Financial Inclusion Institutional Award. Ladies and gentlemen, a round of applause for them once again. Congratulations on this feat. In the spirit of inclusion, allow me to make welcome a son of Africa who is domiciled in the Caribbean. We're pleased to receive the Minister for Economic Affairs and Investment of Barbados. Would you please make welcome the Honorable Chad Blackman. We welcome you home. We say Akwaba. We now proceed to a very important panel which feeds from the submission made by the second Deputy Governor of the Bank of Ghana. If really we are to serve effectively the underserved, then we would need a robust digital public infrastructure. The question is, what is the highway to deliver that? Answering that question, ladies and gentlemen, it's my pleasure to call out the following panelists and the moderator. Would you welcome the moderator, Mr. Sopnendu Mohanty, Chief FinTech Officer, the Monetary Authority of Singapore. A round of applause. Let me also invite Mr. Dare Okujo. He is the founder and Chief Executive Officer of One Afrique. Let me invite the first Deputy Governor of the Bank of Ghana, Dr. Maxwell Opoku-Afare. Allow me the pleasure of inviting, ladies and gentlemen, the Minister of Communications and Digitalization of the Republic of Ghana, the Honorable Esla Owusu-Ekufo. And finally, ladies and gentlemen, the Vice President for Private Sector Infrastructure and Industrialization, African Development Bank, Mr. Solomon Quino. In the spirit of digitalization, he's turned into a woman. Please, a round of applause.
Thank you. Welcome.
Hi, Larry.
Welcome.
Okay, we are on? Okay, 45 minutes. Okay, good. Welcome to this panel, and this is a topic which, deep in my 9 years career as a regulator, I've been indulging on DPI almost every month in some form and shape. So I'll be completely immersed in the discussion as a moderator, but I'm expecting very candid remarks from each of you. Now, we know that if Africa has to be part of the global digital economy, there's one non-negotiable. You must have your own unique DPI, but same time it has to be interoperable. It has to connect to the globe. It has to be purposeful. It has to be something everybody can participate. So from each of you, give your 2-minute perspective about DPI, what you think and why it's so critical for digital economy. Can I start with First Governor?
Hello, I'm on, yeah. Thank you very much, SOP, and DPI is very critical.
Sorry, by the SOP is a short form for my name, Sopnendu. It's not a standard operating procedure.
I mean, if you are at the beginning of this conference summit, the first day capital meets policy, DPI was at the center of that discussion. Then we moved to the governors roundtable. DPI was at the center of that discussion. Then we came for the opening, big opening session, right from every single speaker to the president. It was all about DPI. And we saw how the Secretary General of AFTA linked DPI straight to the objective of the African Union, going back to 1963. So if you look at it, and even today's discussion, right to the presentation by the second Deputy Governor, she went into DPI. So DPI has become critical. And if you look at the key features of DPI, it's talking about trust, safety, interoperability, connectivity, linking or closing the digital gap. If you look at all this, then what comes to my mind as an economist is really delivery of public goods. Because these are public goods. If you talk about digital ID, talking about promoting trust, and the reason why I'm saying that is that when the Bank of Ghana piloted the CBDC, one big message that came out of it is that if it is the government led by the central bank that is going to introduce CBDC, then we are happy to be on it. They are talking about trust.
Yes.
In there. So if you look at the key features of DPI, then the question is delivery of public goods. When it comes to delivery of public goods, then what is the role of the government? Do we expect the private sector to deliver public goods and at what cost? Because DPI is also to ensure that the services are delivered at reduced cost to be able to improve inclusion, because inclusion is part of DPI. So then it's really about partnership between government and the private sector to be able to deliver that kind of DPI, public infrastructure, digital public infrastructure, that will be able to deliver services to close the digital gap, to promote inclusion, but to assure of safety and interoperability within and interoperability across the continent. And this raises the issue about budget.
Okay.
How do we finance DPI? And so I think the discussion should focus on who delivers, what are the partnerships, what is the budget, what are the threats and the challenges. Or cybersecurity comes in as a threat, and so many other issues that we'll be able to discuss.
We will
Thank you very
discuss
much.
that. Now, you talked about money. So you have somebody side of you who has money. Okay? Can you go to the money person?
Yes, you can.
So what is your view on DPI when it comes to funding?
Okay, so I must say that there is an assumption that Africa is far behind. As a bank, we've spent $2 billion in the whole digital ecosystem. I have colleagues from World Bank, IFC, and you know that we have invested significantly in the ecosystem. Currently, 85% of Africa has access to mobile coverage. It didn't happen by chance. 37 out of 38 coastal countries have access to submarine cables. It didn't happen by chance. A lot of the countries we're talking about, Ghana, Nigeria, have one of the best payment systems you could think about. I mean, you just use an access code and then transfers are made. This doesn't happen in so many Western countries. So we must applaud Africa for the progress we have made. But when it comes to DPI, a key subject matter is interoperability. While there has been progress, it has been progress made in silos. So that we talk about ID systems. If you look at your national immigration services that provide the passport, anyone with a passport has an ID system, right? Has an identification. If you look at many birth certificate agencies, they have ID system, but we haven't come to the point of making that interoperable. And that's where financing comes into play. As a bank, we are committed, and for the next 5 years, we've launched what we call the Digital Transformation Action Plan. And we are committed to supporting government in developing and financing frameworks that allow interoperable digital systems. Because we know that there has been significant investment. But one thing I want to challenge on the DPI conversation is there needs to be an assessment of where Africa is right now. Because like I said, we have this infrastructure and they have been expensive. If the government could open up how much they, with our partnership, have invested in this infrastructure building to where Africa is, you'd see that we can't overlook these systems. And then building from where we are, what are the frameworks that would now enable us to attain to best practice? Rather than being prescriptive about the type of technologies, we should be developing framework, accessing where Africa is, and helping them on that journey to move from where they are to where they are to be. So the bank is committed. If you need financing, we're here. We're your bank. The African Development Bank is your primary bank.
I will put her telephone number after this panel, so you can reach out. Okay. But Minister, before I come to you, I want to get the private sector through, because all of them going to give me a very difficult question to you. So I'm going to hold you to the last. Okay. You know, I'm going to be a little more critic here. Yes. She mentioned there are very good examples in Africa about success in pockets of DPI. Are we caught up in our own narrative of success and not looking at the end goal? Because sometimes success can get you distracted without thinking about the broader framework.
Absolutely.
As a private sector champion, you have built a payment construct. In your view on DPI?
Yeah, look, I think in general, the truth is kind of nuanced, right? So,
truth is nuanced.
Always.
Always nuanced.
Always. Nuanced.
Okay.
So I think for me, if the North Star has to be prosperity.
Okay.
We want to move people to prosperity across the continent at scale. If we want to do that, in my opinion, there are three critical infrastructure that needs to work. DPIs. And I will call them networks because it's more than just an infrastructure, it's networks. The very first one is telecommunication. And I'll give us a good mark on that. Across the continent today, I think everybody has a knowledge that access has been widely spread and we can have that. So we have a well-functioning continental telecommunication network. Second one is transportation. I will give us a fail on that. You know, for many of you to get together, I don't know where you're coming from, but it was certainly not easy. So that we still have work to do. And that is a little bit more complicated because it involves physical things that we have to do. Last one is payment. And that's where I've been spending the last 15 years of my life. And there, I believe the answer is somewhere in between. So from a private sector point of view, we as ONAFRIC, we made a bet that this network will actually be a network of networks. And we bet 15 years ago that how people will be able to move money across the continent will be through mobile money. So we went ahead and interconnect mobile money platforms across the continent. And every day we process hundreds of thousands of transactions, which is someone picking up a phone in Kenya and make a payment to Tanzania, picking up a phone in Tanzania and pay a business in DRC. But there are still some buts. Ghana is a but in that. That as much as you can walk,
We're in Ghana, by the way.
we are in Ghana, so you know, it's part of the discussion. Like, it goes back to, if you think two traders, one from Togo, it's about 3 hours drive from here, and another one from Ghana, wanting to actually trade with each other, they can literally pick up the phone and talk to each other. No barriers, no nothing that works. They can drive goods across the border, but they can't pay each other. And I think now the solution requires 4 layers. First is what I call the messaging layer. That's technology, APIs, many people in the room can solve that.
Connectivity.
Easy, connectivity. We've done that at scale. Second one is around risk and compliance. When you start talking cross-border, you have to be very much aware and able to manage risk and the compliance aspect. Third one is around settlement.
Around?
Settlement.
Settlement, yes,
Yeah.
of course.
That it gets a bit dicey because the expectation that mobile money has created across Africa is that payment is real time. Now, if you believe payment is real time, well, in settlement, someone needs to be out of pocket.
3 days.
Someone needs to be out of pocket. Otherwise, it's not real time.
Yes.
So who's going to be out of pocket? So there are some discussion that need to be made there. And then the fourth one is trust in the system. And I think that's where we need the sovereign, that's where we need the central banks, we need the government to actually come together so we can solve that last bit.
I'll come to that in our second round. Minister, you heard people believe in DPI, we must have. Money is available. While I questioned $2 billion, they should put $200 billion. So we need more money. He talked about there's still a fundamental infrastructure framework gap. As a Minister of Telecom, I think you have a sense on infrastructure, policy framework. Your view on DPI, given they have to ride on what you build.
Thank you very much. I think that all that has been said is pointing to the fact that we need inclusion. And for us to have the true financial inclusion on the continent, we need to make sure that our fintechs have the foundation, the foundational infrastructure on which to deliver those services. So for us, digital inclusion, financial inclusion, connectivity is non-negotiable. And so what we've been trying to do is to close that gap in country so that no matter where you are, you'll be able to access these goods and services. And we've found that private sector won't go to certain parts of the country. The public sector can't do it alone. So it has to be a partnership.
Sure.
And that for us has been the key in rolling out a rural telephony project that's connecting, building some 2,000 cell sites to connect some 5 million currently unconnected people. And we find that even if you provision no matter how high you provision the capacity, it is used up. So there is a business case to be made for extending connectivity to all parts of the continent. If it works in Ghana, it works everywhere. Once it's there, they will use it. And we need to find a way to make them utilize that infrastructure that has been put in place. So digital literacy is also critical. It can be there, and they will only use it for phone calls and WhatsApp messages. But what other uses can they put that infrastructure to? They need to be taught to use that. And one example that always comes to mind, pre all this, is when Ghana did when we removed the zeros, what do you call it?
Redenomination.
The redenomination. Everybody thought that the market women would struggle to utilize the new currency, the Ghana cedi, instead of the old one. They were the first to get it. When it comes to their money, they know how to figure out how to make it work very quickly.
Sure.
So many of us were overpaying and underpaying them. And they will teach you that, no, this is how much you have to give me. And the honest ones will give the change back. The others will keep the change. But they get it. So once the infrastructure is there, with some basic instruction, they would know how to use social marketing to get their goods to market and to use the digital financial tools to pay for it seamlessly. So it's incumbent on us, one, to get the connectivity right, to get the digital literacy right, and to work on giving them affordable access and the digital devices to be able to utilize that infrastructure. You've got all that in place. Let's build our networks to our borders and connect to our neighbors.
Sure.
So you do that and you have seamless connectivity across the continent. And to be able to connect your systems regionally or sub-regionally or even continentally, you have to break down the silos internally as well. And so we've been working towards getting my colleagues and others to think in a whole of government approach. The data you generate in your sector is not your data, it's the country's data. So let's find a way of building a data lake so that we'll be able to utilize all that data, analyze it, and utilize it for policy making and decision making in a better way to serve our countries. Yesterday, I got to learn that the president was the digital trade champion for the continent. I didn't know that. Yeah. He's also been pushing for interoperability of our financial systems on the continent, and for good reason. Ghana, Nigeria, Kenya, Rwanda, South Africa, for example, can't develop in isolation. We will all develop at different paces, but we have to grow together. And so we have to think locally, but act continentally and globally. And that's the only way to lift our continent out of poverty. Digital technology provides us with the quickest way of doing it. Sure. And so by pooling our resources, counting on the support of international, the World Bank and other international lending agencies, and financial institutions like the African Development Bank, Afrexim, IFC, and the others. And I'll urge them to invest more in digital. You've done a great job so far, but it can unlock several keys. We're talking about agricultural technology. We can get food self-sufficiency on the continent if we utilize technology to help us grow goods, our produce better, get our produce to market quicker, and deal with post-harvest losses easier. And using technology, we can do that. We're talking about financial technology, educational technology. Everything, I think that we need to move towards thinking of digital technology as much of a utility as electricity or water. And so government should invest in that sector, as this government is doing. The private sector should partner with governments, and financial institutions should invest in it. This is the one guaranteed sector in which you will get significant returns on your investment. It never fails.
Absolutely. You know, my first round of nice questions are done. Now comes the difficult round. And it'll be a little unpleasant time now. As a moderator, I can do it. I don't have risk of many things. Okay, we go to the central bank. And before I come to you, let me summarize the first round. what we are saying, a definition of DPI has 3 layers. There's this trusted digital identity, which recognizes everyone, every African in a trusted way. Then you have an ability to send money to each other. It's an interoperable payment layer. Then, as Minister said, the 3rd layer is trusted data about individuals and corporates which can move across, which can build the real economy, the economic inclusion. This is called social inclusion, identity, then financial inclusion, payments, then economic inclusion is the data exchanges, so data lakes, as we think. Central bank has a very strong role to play because it is core to our financial system. As a central bank, I can say, know your customer, money laundering, terrorism financing, consumer protection, market integrity, all are core to our financial stability challenges. Plus, now we have a tech risk issue because technology being new risk. The cornerstone of a DPI is to have an identity which is recognized by everybody. And it starts with central bank. I'll tell you why. In Asia, the first institution which recognized digital ID as a public tool is the banks. They use this for know your customer. It is the central bank which gives the policy direction. Question to you, Governor. What can Africa do from a policy standpoint, from a central bank perspective, to allow that framework, to allow digital ID to be the basis of your KYC?
Well, it's true. You said your nice questions are.
So the nice questions are over. Yeah. Time for difficult chat.
Yeah. But so thank you very much. I think in the case of Ghana, the work has been made easier by the government, because prior to the government rolling out the national identification scheme, we were thinking about our own VBN, which is what you're talking about happening. Then we realized that the VBN is just an integral part of the entire national identity, which is biometric, which is digital. So as we speak, and as the President and the Vice President said, as at now we have 17 million Ghanaians who have the national ID, which is biometric and digital, and has a lot of components on that. So the Bank of Ghana actually came out to say that, give a guideline that all financial institutions, including the different tiers, from the banks to the savings and loans and also to the fintechs, are going to use that national ID as the unique identifier in the banking system. And that has been rolled out since, I think, 1st July 2003. So as we speak, every single account in the banking industry, in the banking sector, in the savings and loans, and we are here to roll out the fintech. It hasn't been done yet. It's linked to this unique national ID, which is biometric and unique identifier for every Ghanaian. So that has been done. And we're already beginning to reap the benefits of that national ID. SOP, you and I working together, we've introduced what we call the Universal Trusted Credentials.
Indeed.
And that Universal Trusted Credential is making sure that every single customer is able to pull together their biometric footprints to be able to create a trusted credential that can be used to identify ability and willingness to pay, to help you to be able to have access to microloans without providing any tangible collateral. And as we speak, over $300,000 has been loaned out to MSMEs using that trusted credentials with very minimal NPLs, if not zero. So what we are doing is that we are beginning to reap the benefits of having digital identity in the financial sector. And I think that as the minister is here and we are all here, this is really a case that has to be spread out beyond the financial sector to the entire country.
Absolutely.
Where digital IDs, trusted credentials can be harnessed and exploited to be able to bring benefits to the entire, especially in the health sector.
Governor, I don't want to take the hat of a Ghanaian governor. I want to think like a One Africa governor.
Yes.
Okay? Will you allow the same privilege to your Nigerian counterpart? If they come to Ghana with the national ID, will you allow them?
I think we
That's the difficult question.
Yes, we discussed this extensively in Singapore, remember? And actually, we were moving towards coming up with some standards in terms of what should be and go into the components of the distrust credentials. If we come up with the standards, we all have the same definitions, and we're able to passport this across countries, then clearly I know what I'm receiving from Nigeria, I know what I'm receiving from Rwanda, I know what I'm receiving from Tanzania, and I think that at that point, central banks have no choice than to move together.
Here's the
We are here
response.
together.
Here's the response.
Deputy Governor, I can actually open at least mobile money account with my ECOWAS ID. So I think Ghana has already moved at least one step outside of Ghana in that.
But there, you acknowledge there is a broader work to be done in One Africa to allow every central bank to have a common framework for trusted ID. That's kind of a foundational gap today we have, right? So we got to fix it. Now, one more unpleasant question to you from a funding perspective. You know, funding is not restricted to funding a national infrastructure for ID. When you talk about digital economy, you have to fund payment infrastructure, you have to fund identity infrastructure, you have to fund data centers, you have to fund fintechs who are going to build solutions on the infrastructure. It's a whole economy of funding. That's a huge amount of money required. Are the development bank ready to do this? And if not, what can we do to make you get more monies to give it to us?
We are ready to do this, and we have already started. So, as you broke down the different layers of DPI, and just
Sorry, one more question you can take. You can add, is there any rule only for private sector to come and work with you to fund this thing? You cannot do alone.
Of course.
So take the two questions.
Great. So if you look at Africa as of 2018, I think it said that there was a $100 billion financing gap, which is equivalent of $9 billion per year to bridge the digital infrastructure gap. We don't have that money. No institution acting alone has that money. But I can tell you that as a bank, we have been thinking about digital as an ecosystem from day one. So I give you examples, and even before the terminology of digital public infrastructure came up, we called it e-government. We called it digital identity system. So when you look at the bank open up a lot of e-government systems, which is digitalization of government service, I could mention numerous, from Tunisia to Ghana to Cape Verde, where we have supported with digitalization of government services, more than 100 government services in Cape Verde alone. For instance, one of the countries we work with, they do elections, and in 5 minutes, they all get their results. And in Tunisia, the Digital Tunisia project, which was supported by the bank to a tune of 134 million euros, also digitalized government service. In Côte d'Ivoire, right now, we're supporting with the Zero Papier 2030. I hope that I got that right, 2030. And so we've been working on this, on these principles. But the difference is, across DFIs, we have not been quite disciplined about harmonization and interoperability. So when we finance in Tunisia, and I'll be very honest, and when we go to Cape Verde and when we come to Ghana, it's really helping them solve their national issues. And now, so more and more, we're stepping out of ourselves, and I'm happy that the DPI conversation is coming to look at a bird's eye view, right? AFDB does work, the World Bank does work, different institutions and the private sector does work. How do we make sure we're integrating these principles so that when we are now having this regional conversation, when we have fixed trust, we know that at the technology or implementation level, there's something to work from. And that's where we're coming. How can we work with the private sector? There are a lot of ways we can work with the private sector. So for instance, one avenue, especially in rural areas, Honorable Minister, you mentioned, one thing we help with private sectors, which I know there's no business case for rural areas, is provide guarantees. We can provide off-take guarantees. We have instruments like that that help the private sector de-risk. So you come here, you're not sure if there will be off-take, you're not sure if, you would make returns. We have products like that where we can full credit guarantees, full risk guarantees that we offer to private sector, which helps de-risk it. We also offer services such that even though we finance public sector, it's operated through a PPP structure by private sector. And through concession agreements, there's a cost sharing or profit sharing arrangement. So there are a lot of innovative and blended approaches that we are able to explore to make sure that DPI is a principle, is in place. But I must add here that the thinking and the heart of digitalizing and making services interoperable has been in existence, but we haven't followed these disciplines of, interoperability, accessibility, transparency. Now, there's one critical issue because as a bank, we've also explored regional infrastructure. So I could give you several examples, like the whole Central African Republic, together with the EU and the AFDB, we were responsible for achieving 100% first-mile connectivity in Central African Republic, right? But these conversations are very difficult. By the time you go to DRC and Cameroon and maybe CAR, you start seeing what trust means. There's a lot of, and as Africans, our regional institutions, we need to have honest conversations with ourselves. What is a good enough policy framework? If you look at Cote d'Ivoire, where I live, and Ghana, and you look at the policy environment, Cote d'Ivoire's policy environment is closer to France than it is to any of its African countries. And Cote d'Ivoire is more willing to work with other countries than is African. So we've played our role. We are playing our role. Private sector is playing our role. But you find that you have to have individual conversations with these countries, and then you have to fix individual barriers. And we have ECOWAS, we have EAC, we have SADC, we have the African Union, and thankfully right now we have the digital protocol, which was adopted in February. We need as Africans to have honest conversations beyond the political layer to say, if we put this framework in place, would you cooperate?
Yeah, so I think that's a good question. So I just try to get to the questions now. Now, Minister, I'm going to bring 3 uncomfortable questions to you now. Sorry, you can say we can talk offline if you don't want to answer this question. There are 3 elephants in the room. One is there's a huge nationalistic in Asia, particularly called data nationalism. Every country wants to hold data in their country, and they don't want to share. That is a huge deal breaker when it comes to One Africa or One Asia, whatever we call it. Data residency, data nationalism. Second, cloud infrastructure. We all know, if you ask any startup in this world, any digital economy application provider, they're no more thinking about local data center. They're designing software for cloud native. Second. Third, they expect a huge interoperability in terms of policy, consistency, taxation, or rules for how a digital service is treated. And these are deal breakers. As a Minister of Telecom and dealing with these policies, your view on data, cloud, and taxation. I know it's a very controversial topic. Give us a quick view of how we can spend a whole day on this.
It's not as tough as I expected it to be. Let me attempt an answer. Data sovereignty is important.
Yes.
We need to know where our data is being stored, how it is being used, who has access to it, who has control over it. So I'm all for systems that allow for data sovereignty. However, we need to have trust that my neighbor will also treat my data the same way as I'll treat his or hers, and so that we can begin that conversation. And fortunately, we've already started having those conversations on a regional level, beyond the individual level. But before you can even have that conversation, you need to know where your data is, how it is being handled and protected, how individual rights are also being protected by those who are handling that data locally. So data protection laws are important, and every nation needs to have it. But it needs to be flexible enough to also create room for pools of data to be utilized regionally. Now, within the auspices of the Smart Africa Alliance, we're already working along those lines. And we are developing a data and cloud policy for the African region, the Smart Africa Alliance countries, which are about 33 as I speak. So that's a significant number of residents or citizens on the African continent that we represent. So if these 33 are able to align their policies around data usage, rationalization, storage, and sovereignty, and can build trust in how we utilize that, we've gone a long way towards integrating the continent in a practical way, and we're already working on that as well. And that's also dealing with the harmonization of policies. But sometimes it takes a while for these regional operations to be implemented. So we also go the bilateral way as well, so that as a coalition of the willing, those who are ready to start working, go ahead and do so. And I'll use the ECOWAS Free Roaming Initiative as an example. It was mandated in 2015. As at 2022, we still hadn't gone any way towards implementing it. So Ghana decided to talk to Cote d'Ivoire to see how we can do it on a bilateral basis. We've done so. So it's up to our regulators, once the policymakers take the decision, to take the bull by the horns and make it work. So if our telecoms regulators in Ghana and Cote d'Ivoire could implement free roaming, and now we're talking to Togo and Benin, and we're well on the way towards doing so within the next couple of months. It's doable, but someone has to show the way.
Regulators.
So our central bank governors in this field as well can also start talking. Ghana, talk to Nigeria, talk to Cote d'Ivoire. What can we do on a bilateral basis while we work towards the
multilateral,
the larger example? Once two countries do it, the others see that, there are challenges, but we found a way to surmount it on this small level. So let's also join. So seamlessly we begin to build the framework which will enable us to integrate our systems globally. We have the Anglophone, Francophone challenge as well, and as you've indicated, systems that mirror our colonial partners. But we got independence years ago, so we should stop using that as an excuse.
Very good point.
To impede integration of our continent. We've been trading amongst ourselves for millennia. And long before we had any of these technologies available, we were walking and riding across the deserts to trade amongst ourselves. Our people are resilient. And where there's money to be made, they will go and find it. So let's help them utilize these new tools to do stuff that we've been doing for millennia. And break down some of the barriers that are also self-imposed. But sometimes too, we're difficult people. And so the criminals will also take advantage of some of these systems. So we need to be able to reduce the risks involved. And that is why these rules and regulations are important. But let's focus on the essentials. What can we do to stimulate growth on the continent while minimizing the risks to the consumers? And if we put our heads together, we will do it. Now, who pays for it? And this is one of my favorite hobby
Tax
horses.
question. The tax question. Yeah.
And I've said so several times. Those who utilize the infrastructure must contribute towards rolling out the networks. So the OTT value-added service operators, like the big tech companies, have to pay towards rolling out the connectivity infrastructure on which they deliver their services. And I make no apologies for it. The how has always been the sticking point. They recognize that you can't ride on the back of networks put in place with the sweat and toil of the network operators without contributing to it. You're utilizing it to deliver your Facebook, Google, Instagram, whatever social media services to the people and making millions from the advertising revenue that you're getting from it. That's fair enough. Share some of that with the network operators and the governments to roll out that infrastructure. And the governments also need the tax revenues that are generated from the businesses that are utilizing those networks. So instead of shying away from that conversation, we need to have an honest conversation about how to spread the pain evenly and share the gains.
Minister, that's a very good point, because one of the friction in this system is that the lack of agreement among countries on common taxation for digital services. Very difficult topic. We are not going to debate here today, but we are leaving it to the audience to think about. This is coming. It has to come. This is genuine, legitimate. We've got to pay for what you get benefit out of it. Okay, I'll make a difficult question again. I'll try to make it. I think the last 1.5 days we have been hearing about, in the payment side, almost I feel that we're trying to solve a problem which is perhaps way further down. In my mind, payment has got this 5 layer. You have to solve, as you said, you have to solve the connectivity problem, then you have to solve the interoperability problem across the country, then you have to solve the settlement problem, and then you come and solve disputes, then you solve liabilities of coverage because there can be breaches, and then you think about FX. We have got caught up in an FX discussion before anything else. As a payment guru in this part of the world, why we are not having this foundational discussion settled first before talking about FX?
I agree with you. I think partly it's because the macro in many countries force the FX conversation. And when we talk about payment, immediately the mind goes to FX. I mean, most of the trade is with the neighbors.
Yeah.
You know, we talk about money that Nigeria gets, or Ghana for that matter. Ghana still gets about $2 billion a year between Cote d'Ivoire, Nigeria, Burkina Faso, Togo, moving in together. And similar amount goes to those countries. But we very quickly conflict this with Western Union coming from the US into Ghana. And the policy and the framework is designed for that transaction, the transaction that comes in dollars, not the one that is coming in CFA or that's the one that is coming in Naira. So I completely agree with you. But it can work. And we see it every day in East Africa. Every single country in East Africa has their own currency, from Burundi all the way to Malawi. And every single of those are connected to our network, and millions of people every day use mobile phone, their mobile money, to make small value transactions that does not require to know what the value of the dollar of the day is. So and I think really one thing that gives me a lot of hope is we've seen it working, and we've seen it working at scale.
So, and I know, I just want one question. Mobile money is great, but we are talking of 3 kinds of money. There's a large value transfer.
Absolutely.
There's a remittance money between bank account to bank account, and there's a mobile money. I think central bank has a role to play. I think the elephant in the room, in my mind, if I'm a private sector looking at governor, the cross-border settlement has to be solved. It is a very essential part of the puzzle. Can you echo it so I can talk to my friend governor to look at it?
Absolutely. I'm using mobile money as an example. Today, we process transactions across bank account, even across offline. We have a network of about 400,000 offline merchants in Nigeria alone who are trading with the rest of the continent. I'm using mobile money because it's the closest to the network that works, which is the telecommunication network, which I mentioned. That is a network that none of us in this room will even imagine that Ghana should only be receiving calls. Imagine if that was the way we set up the telecommunication network, that we cannot make call out of Ghana. What would that be like? So we've been able to live with that. So that's why I'm using mobile money, not so much. But the principles are the same.
Exactly.
The principles are the same, and the settlement. And by the way, I'm very confident that we will solve it. I just think that it is important we keep it in mind that it is important. It is important not for the settlement itself. It is important because our markets are too small. That if you are from Togo or from Benin, my country, you got dealt a bad hand. You know, Togo is like 5-6 million people. Benin is about 10, 12 if you add the Nigerians.
No.
So if you come up with an idea, if we're talking about the digital economy, if I come up with an idea in Benin, I got dealt a bad hand because I can only sell to 12 million people.
Yes.
But if there is a continental payment system, now I have a real market of 1.5 billion people.
Absolutely. No, the reason I say that because Asia is no different from Africa. And I was sharing yesterday, we are the only country in the world who has connected the domestic rail to some country outside, which is Malaysia, India, and Thailand. We had identical system. I'll repeat again for people who have not heard me. We had identical system, identical structure, identical UX, identical policies. Guess what? It took us more than 2 years to connect. Who had the bottleneck? It was the policy bottleneck. Because there was an issue of how to treat know your customer. There's an issue of when does we flag risk. There's an issue on who settles the dispute. These are very boring topic, but you've got to discuss before anything can start DPI. So as a payment provider, I think it's important. Will you agree with me that we have to work with central bank, come with a common agreement on the settlement part? Then the DPI will really work.
Absolutely, and I agree. But again, I want to acknowledge the progress that I've already made. If you look, and I'm going to
You're being nice to people.
No, I'm not. I'm being realistic.
Okay.
So I'm saying again, because you look across the continent, regulation on KYC for financial inclusion, whether you want to call it mobile money, schemes, wallet, but it is largely similar because we've worked together. Now, I'll tell you the real problem is courage and trust. That's the real problem. Let's say we open a transaction between Ghana and Burundi. Who's going to hold the Burundi francs?
Yes, indeed. There's a funding risk.
Does Burundi trust Ghana Cedi enough to hold Ghana Cedi?
But that's the point.
That's the real problem.
Yeah.
So I believe we passed the phase of policy to a large extent because this has been front and center for many years. I think we passed the question of technology because there have been companies of ours like ours who have done that work. I think we are at the point of trust and courage.
I have 2 minutes left. Sorry. So let's take less than 2 minutes to at least agree on something. One thing you want to take away from this panel, you think we should do? One thing.
I think
as One Africa.
Yeah, as One Africa, I think before I agree that we should talk together and harmonize our systems and work towards interoperability. But we need to start talking together. I mean, listening to everyone is about disagreements. How do we do this? It's because we are not talking. And I think we need to start talking, but we have to think big, start small, and start now. So even as Honorable Minister said, if Ghana can start talking to Nigeria or Cote d'Ivoire and it works, then you can begin to scale to other countries. So I think that has to start.
Start talking together.
Yeah.
Money.
Money.
For us, I think from this conversation, we feel responsible because the 54 or 55 African countries are members of the bank. And so one thing we want to start doing is using our convening power to get this discussion to happen. So one reason why we came here was the thinking of a regional regulatory policy sandbox should start happening across central banks. And firstly, we will start with fintech. So this is a discussion that I am happy to have with the bank governors. I have had the discussion with some, and it has been welcome, and also yourselves, because we, as the premier development financing institution for Africa, should get people to the room. So that's my takeaway. We will do that, and you can hold us responsible.
So you can unlock money if there's a policy harmonization.
Exactly.
Okay, that's second. Minister, you're one.
The time is now, and I think we should move beyond the rhetoric. We have all the good intentions and plans, but we need to start acting towards giving effect to it, and start small. And you never know where those conversations
I would
might lead.
request Ghana to take a lead at least to get this started.
We are the black star. What are we waiting for?
Okay.
We take the lead and others follow.
Okay.
So that's a challenge to Governor, that please start those conversations. PAPS must work. The Pan-African Payments and Settlement System and HonorFreak must work for both traditional payments and for digital payments as well. And the only way to do so is to start engaging in a good faith manner
So
to harmonize our policies and
So next year when we do 3i Summit, we'll do a status check, what happened. So you have 12 months to figure out, have you moved forward? You're wrong.
You know, they did the work for me. So I would say, I see the central bank of, the governor of the Central Bank of Tanzania. I saw the Rwanda one earlier. When we come here next year, it should be possible to move money from Ghana to Tanzania or to Rwanda and back. And of course to Benin, my own country.
Thank you. And I hope, Governor, they'll allow me to moderate within the next 12 months. With the same panelists, we can do a check whether we have done something meaningful. With that, thank you very much. Thank you for being a nice panelist.
Thank you. Thank you.
Such amazing insights.
Thank you.
Thank you so much.
Thank you.
How about
Thank
a group
you.
photograph?
Thank you.
A photograph with the panel. And while they're that, allow me to thank all the panelists. Representing Mr. Solomon Queno of the AFDB, we've had Madame Uyoyo Zino Edosio, Principal Innovation and Digital Expert at the AFDB. Please, a round of applause for her. Thank you very much, ma'am, for joining us. And so, we proceed safely to the next juncture where we get to explore a reimagined, or let me take it again, we get to reimagine the digital assets of this world. But let's do something right about now. Let's go for a short coffee break, just a very short coffee break, 10 minutes max. We shall reconvene here for the next session. Is that agreeable? So please, 10 minutes is 10 minutes. We'll see you shortly. And while we're at that, the Honorable Minister, together with the governor and the official party, will be led to the exhibition area for a little showcase of what we've put together. Thank you.
She's coming. She's coming.
Oh, it's in. Red hour receipt now.
Boss, that's my bag. Here, take this.
She's coming.
I know. Go to the pharmacy now.
Babe, she's coming. Oh.
Pay faster, pay safer, and pay easy with Momo app. Download now and pay with the QR code, merchant ID, and so much more.
I mean a real break, where you didn't constantly worry. No breaks like being on the golf course but missing easy parts because you were distracted by failed transactions. Or when you're with family, but pressure from work prevents you from bonding with those you love. Or perhaps when meeting clients but thoughts of system downtimes put you off your game. Well, we say next time you're on the golf course, focus on making par, get that birdie, at that family barbecue. Focus on getting the ribs tender the way Junior likes it. We process digital payments for your business. On your next business trip, soak in the views and focus on closing deals. We process digital payments for your business across Africa. Live, work, play a little without sweating over payments processing for your business within Sanu. You are in good hands. When
We continue with the next session in the next 5 minutes. Ladies and gentlemen, just grab your tea and coffee and make your way back in.
or visit changoapp.com for more information.
Oh, Araba.
Chango for your groupings and crowdfunding.
Araba, there are some people at the door. Go and tell them I have traveled to Russia.
Yes, Daddy.
Where's your father?
My father said I should tell you he has traveled to Russia.
Your father has killed me. I sent him money from America to complete my house for me.
Are all student association contributions?
Even the money from the fundraiser for Kweku surgery.
Oh! He too? Don't be a victim. If you're contributing to a project, alumni dues, or any public campaign, Chango is your best choice. Chango keeps track of all donations and gives you the power to know exactly where the money goes. Chango is approved by Bank of Ghana. Call 0270-066-614 or visit changoapp.com for more information.
Uncle, my father is hiding under the bed.
Oh, Araba.
Ladies and gentlemen, we're all set for you. Wherever you are, please return to the hall. You can come with your tea, your coffee. Let's begin the next session on time. For those of you who have just joined us, I ask that you please draw forward. Thank you very much for your understanding. The next session begins shortly. I ask that we all take our seats. Thank you very much. Madam. Hey, you do.
Kindly, I ask that we all make our way to the front. Ladies and gentlemen, let's fill the seats in front. We're all set to the next lesson. Thank you.
(25:05) is a good time to call the House to order. I ask that we all be seated. Thank you very much for your cooperation. We zoom straight into the next activity, which is a fireside conversation. For 20 minutes, theirs will be a very amazing conversation on reimagined in the digital assets world. Please make welcome the moderator, Matteo Rizzi. Yes. And our resource person, Mr. Mike Brock. A round of applause for them both. Thank you for your patience.
Hello. So, ladies and gentlemen, welcome to the fireside chat with the two coolest shoes of the conference, as you can see. Mike, tell us a little bit about, your background, and, you're here as a CEO of TBD,
Yes.
but, there is a bigger family of very impacting companies coming from Square, Block. Tell us a little bit your story, please.
Yeah, so we are part of Block, formerly known as Square. I've been at the company for over 10 years, I think I've been working on the same problem for over 10 years at Block. Starting off on Cash App, also, I've actually never worked on the Square side of the business, but I've been part of the company the whole time. And I think the big thing that we've always been trying to solve is the problem of financial access. Our world has always been, how do we get people access to these tools where they haven't had access before? Just to maybe do a little groundwork here, Square basically invented the micro merchant business in the United States by designing that little credit card reader that you could plug into your microphone jack. Things have moved on since then, and we're using chip cards now in the United States and NFC increasingly. But we were providing the ability to accept payment cards for the whole rest of the business. But 60% of small businesses in the United States could not accept a card payment in 2009. Wow. And there were many reasons for that, like risk management issues at the bank. Certain kinds of businesses were more susceptible to fraud than others. And so there was just a sort of sense of, we can't bank these kinds of businesses. And Jack and Jim McKelvey, founded the company to solve that problem. We then migrated into trying to solve financial access for underserved and underbanked individuals in the United States, and that was why we built Cash App. And we've been massively successful with that. I worked on Cash App for 7 years. I was responsible for a lot of our initiatives there, including our banking, our neo-banking strategy, and even our work with Bitcoin and TBD is all about financial access. So for me, it's always been the same story, just different tools and different contexts, and with TBD, a more global focus.
let's double click a little bit into why a digital assets-based infrastructure is important in a continent like Africa, and why could it make a difference?
Yeah, I mean, the world's payment systems are very balkanized. Folks who, even folks in the United States who send money to different parts of the world through remittances, understand like what a pain it is to send money, especially to countries which are not in major remittance corridors. The cost of sending those funds can be quite high, the fees, the foreign exchange spread, and there's other issues as well, right? Trade development between countries which have very little trade, therefore have very little foreign exchange, so you do have to rely on larger currencies like the US dollar in order to create that liquidity. That's just necessary because you need some way to bridge that liquidity in which to actually do the trade development. And we look at digital assets today. We look at neutral assets like Bitcoin and stable coins, and we see the potential there to really improve that problem. You can get past a lot of the cold start problems there and start to establish really cost-effective cross-border payments. And TBDEX, our technology that we're building, which is an open source, open protocol technology that anyone can use. There's no association that you have to join or fees that you have to pay to be a member of it. It's a set of standards and technology that allow you to establish trust, and with that trust, you can build a payments regime that can work cross-border and can also comply with attendant regulations and ultimately drive down cost and increase liquidity in the cross-border context. And we're very, very excited about being here in Africa. We just announced our partnership with Chipper Cash today, and as well as our existing partnership with Yellow Card to really build out that liquidity here on the continent, as well as unlocking that opportunity throughout the global south more generally. We're also focused in Latin America, and hopefully we're going to have more to announce in the coming quarters and years there. But one thing that's important to realize is that we are building an ecosystem. You do not have to partner with TBD to use this technology. And that is what's really key here.
So actually, no longer than 10 minutes ago, the panelists here were talking, I'm in Burundi, I want to send money to Ghana, I need to trust my counterparty, we need to settle, etc. So let's try to make it concrete. How would that work with your tech?
Yeah, so one of the core things that we realize when we look at what is the main thing holding us back? Bitcoin exists today and stablecoins exist today, so why don't we just use them? Well, it's not that simple. I mean, there was a lot of conversation in the previous talk around the importance of identity, which was the main problem that we identified when we first set out to talk about this. We're human beings. We live in the real world. We're here in a room. We're breathing oxygen and eating food and drinking tea and coffee. We have very grounded, real world lives. We don't live on the internet. We're not digital light beings that can exist in a blockchain. So it turns out that the on-ramps and off-ramps into these systems are very important. And our entire system of trade in the world, exchange, our economy, our governance systems are all built on trust. And identity is critical to that. And when I say identity, I'm not just talking about individual identity. Obviously, identity of organizations and institutions are also important, because when we want to conduct financial transactions or economic transactions in the world, we want to know that we're actually dealing with the entity that we think we're dealing with, and that entity has some degree of reputation, and that if something goes wrong, there's some capacity to have recourse, to correct errors, to pursue legal claims when you're defrauded. If you pay for something and you're not rendered a service, or you're not delivered a product in exchange for that, I mean, you don't want to be dealing with an anonymous person on the other side, because then there's nothing you can do. And those of us who work in financial technology or in banking, financial services more generally, know this is a real problem. This happens. It's a big managing the risk of financial loss to these sorts of things is always an ongoing challenge. And it's no different with digital assets. You have to solve this problem. So we are pursuing a set of technologies that we think can help us solve this problem in a decentralized and democratic way, and that's with decentralized identity technologies, which are also open standards and open protocols. We are standardizing on a standard called DID, Decentralized Identity. It is for those of you who don't know, there's a standards body called the W3C, which is short for the World Wide Web Consortium. It was founded by Tim Berners-Lee, the grandfather of the World Wide Web, and it holds a lot of the standards that we use in our web browsers and on the internet. It is also the standards body that is holding the standard for DID. We participate in that standard at TBD. We believe it's very important. It's adding a much needed identity layer to the internet that will give us, hopefully in the next few years, a new way of logging on, a new way of like thinking about your account on the internet, which is something you own. It doesn't belong to large corporations or businesses. And it can also be a substrate on which even governments can issue credentials. Things like driver's licenses, passports, immigration documents can be issued against this decentralized identity as a way to provision proof of credential. Credential and identity in this sense is kind of a related but different thing. And using those technologies and working with governments and policymakers and industry, we believe we can create a safer, more privacy-preserving, regulatory-compliant way to build trusted financial transactions that can be conducted across borders, can also be conducted in domestic contexts as well. So we're very excited about this technology, and we're continuing to onboard ecosystem partners onto it. And so this is like a big year for us.
So obviously, it's not like a switch, like global digital identity for everyone. It will be too easy, right?
Yes.
But how do you make all this like a local digital identity projects that exist today, for example, in a continent, in more than one countries? How do you make them interoperable? I mean, is that a layer, or can TBD help?
So the way that like DID and the verifiable credentials stuff works is, it's a set of tools. So a lot of countries have digital identity strategies. The European Union is pursuing a digital identity strategy, and for the most part, these strategies can easily plug in to this model. Because like just the way to think about it is, I mean, a DID is just fundamentally just essentially a public and private key pair, very similar to how crypto wallets work, that you own and control. And that alone is nothing. It doesn't mean anything. It just, the only thing that a DID does at the base layer is it just allows you to prove that you own and control that identity. That's all it proves. Then you want to do things like have governments be able to issue identity documents into that DID, or private, in our case, like potentially KYC credentials into that DID, which can then be used and presented to services in order to establish trust. Another example might be institutional DID. A regulator could issue a verifiable credential to an institutional DID that proves that they have whatever regulatory license that they need in order to conduct whatever area of business that they're conducting. And so it just provides tools to do this. We think most of these national digital identity efforts can easily be wrapped in a verifiable credential and issued as it did. There's nothing inherently incompatible about these strategies, and it's why we think this technology will ultimately win in the end. And the industry and governments are starting to gravitate towards these standards, realizing that they're very workable and versatile, and we are seeing that. So where I'm from, the United States, I live in the state of California. Our state driver's license issuing agency, the Department of Motor Vehicles, is conducting a pilot, and they are issuing driver's licenses as verifiable credentials, which can be held in these DID wallets, and this is happening. We're seeing pilot programs like this all around the world. There's also another one in the United States. I believe the Department of Homeland Security is looking at digital green cards using this technology. So there's quite a bit of movement here, and this technology is also at the heart of TBDEX. So that's where we think the answer is yes. These things can work together.
So you guys are on a roadshow, there are at least a couple of cities that I know that you guys are sort of spreading the word about the technology. What fascinates you in Africa?
I mean, what fascinates me about Africa is that, the potential on this continent is incredible. I think there's so much opportunity for these technologies to address real serious problems here on the continent. Identity is a big issue here. And around the world, I think the United Nations says, based on their, there's our global, I don't know what our global population says, it's somewhere between 7 and 8 billion people today. But I believe the UN Human Development Agency estimates about 1.2 billion people on this planet have no government-issued documentation whatsoever. That's a pretty big impediment to participating in the online economy. So having ways to create systems of identity and webs of trust that can be used to provide, give provenance to that identity, such that businesses and institutions can feel like they can safely conduct business, is really important to including these people in the global economy. So we think these tools can, these, like I said, these are tools. They don't have to be used by government. They can be used by NGOs, non-governmental organizations. They can be used by private businesses. And so it actually creates an entrepreneurial space for startups and fintech companies to try and go out and solve the identity provisioning problem using these technologies, which are going to be interoperable and able to be used in all of these systems around the world and on the internet more generally.
So we have 1 minute left, and the way I want to use it is the following. I am a developer. I'm an African developer. I'm passionate about coding. Where do I go, and how can I approach TBD?
Yeah, so we have 2 websites that you can visit. You can visit at our main website, which is literally tbd.website, the word, that's our corporate website. And then for developers, tbd.developer. And from there, you can see all of the amazing software tools that we're putting out there in order for developers to get their hands dirty looking at these technologies.
Mike, thank you very much for being with us. Big round of applause.
Thank you.
A member of the advisory board of Elevandi, together with the Chief Executive Officer, TBD, Mr. Mike Brock. Please, they are yours for the applause.
Thank you.
Trust reimagined in the digital assets world. Clearly, it shows that trust is the capital we use in the financial and digital world. For somebody who often straddles that space, I've come to know that it is like Ferrari. It comes very fast and leaves very fast. We move now to the next stage of today's interaction, where we get to examine banking and fintech intersection, balancing innovation, risks, and inclusion. For the next 30 minutes. Because of time, let's limit everything to 30 minutes. 30 minutes. Mr. Jiba Diallo, who is a senior fintech advisor, Ecobank Transnational Incorporated, will be in conversation with the following panelists. Make welcome Mr. Romeo Buje, Chief Executive Officer of IT Consortium Ghana. Corinne Mbiakecha Nana is a member of the PAPS Management Board, Africa Export-Import Bank, AfriExim. Shaibu Haruna is the Chief Executive Officer of MTN Momo Limited. And Valentine Obi is the founder and Chief Executive Officer, eTransact Group. Please make them welcome with a round of applause.
So why is the moderator? Let me ask them. Please have a seat.
Once you do, you stick to them.
Excuse me.
And
Yes.
you go through them.
Where is the
Yes.
moderator supposed to sit? Oh. Okay, I'll sit that way, this way.
Thanks.
Thank you very much. Sorry, I guess you were expecting a man because he said Mr. Jiba Diallo. Sorry. So thank you very much for having us, all of us. And congratulations again to the Central Bank of Ghana for organizing such a great event. So I'm going to introduce myself quickly, and then I'll go to the panelists. So I'm the Senior FinTech Advisor for EcoBank Group, and basically my role is to define the strategy and roll it out within the bank to make it easy to partner with fintechs. So it's really the topics that we are going to touch on today. Before I go to the panelists, I would like to share that when we were preparing the session, they all promised to be tough with me. And they say it's because we are the bank and all the issues are coming from us. So I will ask you, please, ladies and gentlemen, when you are going to share the bad experiences that you have, please don't mention EcoBank. Okay? I want to keep my job. And the second agreement that I would like to have is that I always feel it very unfair every time I'm part of the panel. I'm most of the time the only lady. And they always say, we'll start by lady first. And it's very unfair. I feel it very unfair. So, Corinne, you'll be last. And with this time, we're going to start with the gentleman. So, a very interesting topic, which is part of my daily job. I'm very glad that I have many profiles, various profiles within the panel, and I'm pretty sure that you'll really like the experiences that they will share with you and also the recommendations. So I will ask you, please, to introduce yourself. 1 minute, we've been asked to keep the time short. 1 minute, just tell us who you are, what you do, the organization, of course, you're coming from, and then we'll take it from there. Thank you.
Thank you. Maybe I go first? Okay, that's fine. My name is Shaibu Haruna. I'm the CEO for Mobile Money Limited, essentially taking care of mobile financial services for MTN in Ghana. We support enabling customers to transact, do payments, receive remittance, and other services. We are a key enabler of the fintech economy, which is at the very intersection of banking and the fintech ecosystem. Thank you.
Very much. Thank you, Valentine.
Yes, my name is Valentine Obi. I'm the founder and group CEO of eTransact. eTransact started about 20 years ago. And basically what we did, we connected all the banks, for example, in Nigeria on our switch, and here also in Ghana, and also all the mobile network operators. We are currently in various African countries, Nigeria, Ghana, Cameroon, Uganda, DRC, and also we have a new bank in the UK. And we've been doing this for the past 20 years. When fintech had no miniskirt, nobody knew anything called fintech. And it's a pleasure to be here today to discuss with you. Thank you very much.
Thank you very much. Romeo?
Thank you. My name is Romeo Buje, and I'm the Managing Director of IT Consortium. Yes, IT Consortium has been around also for some time, about 20 years. We are into payments. We started with the banks and are trying to create the ecosystem that links the banks, and then the mobile money came in. We have actually been also at the background enabling a lot of the payments, and we specialize in building what we call vertical solutions on this ecosystem in collaboration with the mobile money operators. But technically, we actually started with the banks, but we scaled more with the mobile money operators. So that is who we are.
We'll come to that. Thank you very much. Corinne?
Thank you. Thank you for having me last. So I'm Corinne Biakecha, an advisor. I'm doing a lot of advisory now, mainly board advisor for Financial Capital, an independent investment, the first independent investment advisor in Central Africa. But I've also joined the board of Afreximbank, the PAPS Management Board. And I'm focusing essentially on advocacy when it comes to digital mass acceleration, the need of digital mass acceleration. And from a background perspective, I've been, I have a financial background, but I spent 23 years of my career in technology, mainly 15 at Oracle, where I ended as the general manager for East Africa and West Transition, 26 countries on the continent, based out of Nairobi. And lately, I was the general manager for Visa in East Africa and the island.
Okay, so you know the topic very well, definitely. Thank you very much. So I'll start with Valentine. And the reason why is because yesterday I was in a panel with one of your colleagues, George, who shared a very interesting experience on the work that you've been doing with central banks and banks. And that experience looked quite good, actually, because from what he mentioned, you work very closely with the central bank at the beginning. And as you say, at that time, the word fintech did not even exist in Africa. So you almost defined it with the central bank. But it seems that your perspective is a little bit different, especially when it comes to partnerships with banks. So I would like to hear more about it.
Okay. No, thank you. Indeed, for the past 21 years, we've been partnering with banks. And when we set up eTransact, basically what to reduce cash transactions in our countries. And so in 2021, what we did was basically to try to get the banks together, but it was quite tough. I remember the first time I went to the central bank in Nigeria to tell them about what we're going to do, enabling the banks to connect together, and then they're going to use mobile phone to make payments. The director was kind of, you think we don't have better things to do than to do mobile payment. Then they were struggling with using mobile payment, using mobile even to make phone calls. So it wasn't very receptive. Now the banks also were the same thing. Now, and I can understand the challenge because when you look at innovators and entrepreneurs, our thinking is slightly different. We're thinking about potentials and we're thinking about opportunities. On the other side, the bank thinks about more of risk and control. And they're looking at, well, they've got customers' money, we need to be careful about it. I think the thing would be to see how do we marry these two great divides, because if we can bring them together, then it's become a win-win situation. Now, in my experience with the banks, most of the time you find out that when people don't understand the solution you're bringing or the technology you're bringing, if they don't understand it, they'll just tell their managers, it is risky. And the moment somebody tells his manager, oh, this is very risky, what happens? They just shut down. Now, over the years, I think on eTransact, we've been able to work with banks across the various countries. Now they understand, and today they're actually proponents of digital financial systems. And we've now gotten the banks to accept this. And what we did, one of the things we did was basically set up for each bank. So you hear about U-Mobile, you hear about GTB Mobile, you hear about all these platforms. They're actually all eTransact platforms, but white labeled differently for the different banks. Because in those days, all you have is just eTransact Mobile on the App Store, and you download it and use it for your bank. But interestingly today, the banks have really adopted it, and it is no longer news to them, and they actually a lot more eager to do more things. But initially it was difficult.
I trust you. We come from a very long journey. You know, I often say that what actually during one of the events that we organized in Senegal, I was telling to my fintechs friends that, you know, don't be too tough on bankers. They see you as aliens, really. Even me, they see me as an alien. So we need to be, you know, patient and make sure that they really understand the value. But I think that we're coming from a long journey, and hopefully we'll get there. So Shaibu, I'll come to you now. So this morning, the Vice President, you know, mentioned the fact that now with the financial inclusions that we're having with mobile money, very soon we'll see more credit scoring and then financial inclusion in Ghana. People will have more ability to get loans, which they are very interested about. So coming from MTN, how would you define the role of your organization to foster that? And what would be your recommendations, being in the middle between the banks and the fintechs, what would be your recommendations to make sure that you know, we don't always see all these opportunities as risk?
No, thank you very much. That's a very good question. Let me start off by, you know, relating to the points that Valentine made around the journey within the ecosystem, because I can very much relate to that. I mean, you're talking 20 years, and I felt mobile money was old enough, but 15 years this year. But we've gone through similar journey from resistance and slowly into acceptance. But I'll say it's even a cautious acceptance, because there's still the viewpoint around, you know, you are competition. But the honest truth is that we need each other in order to fuel this ecosystem. If you think about the very construct of mobile money or the financial services, at the core of it is the financial institution, which is the bank, because the floats sits squarely at the bank, on the escrow of the bank. And the way the whole construct has been designed is to ensure that there is an interplay between the financial institution, the fintech solution provider, and also the DEMI. And at the center of all this evolution, let's not forget, has been the evolution of the connectivity that we have taken for granted today, because all of this is built on a very foundation of connectivity. And today it's such a commodity, we rarely talk about it, but it's important that for us to be able to drive financial inclusion into the last mile, you need that level of scale and reach that is required in the market. But back to the very point you made around the journey around building our economies. We've built a very good business from a transactional standpoint today. We have customers doing tons of transactions almost per second basis. We are moving into a space where we're building credit economies, right? And bringing credit at the very core of our customer journey. And this is a skill that we've learned over time. You know, from a telecom point of view, we started by looking at customer data from their transaction on the mobile phone. And we use that to provide them credit in terms of airtime credit. A lot of lessons through that journey, and that has transitioned into our ability to use new technologies such as AI and other advanced tools to be able to really profile customers. And we've seen MPLs that are, you know, an envy for most financial institutions within an African context. So it's such a great opportunity, and looking at data, looking at the technology that is at our disposal to be able to deepen the curve in terms of offering credit to people, because the real economy and the real multiplier effect of any economy is around access to credit and ability of banks and ecosystem players to know that the funds that they are disbursing would be repaid. And I think I'll pause here. I know we will have a lot more to talk about in this area.
Definitely. Thank you very much.
You.
Thank you. So, Romeo, now I'll come to you, and I'm pretty sure that you have a lot to say after Shaibu. So, you mentioned that your company is providing a platform that is mostly behind the scene, but that you've been there since ages now, right? So you know pretty well the ecosystem, and you have a good experience. So, what is your overall experience when it comes to mitigating risk? And I know you and I discussed the fact that many times when you go to banks or central banks, you come with innovation, they see risk. Okay? And that's really the topic that we are supposed to discuss today. So, what is your experience? And what would be your recommendations to make sure that we improve and we accelerate?
Thank you very much. Normally, when it comes to collaborating with financial institutions, banks, the first thing that comes up is risk. And first, they don't know who you are, they don't know where you're coming from.
An alien, as I was saying.
But for us, in maybe ITC, what we've sought to do is to build infrastructure, organization infrastructure, governance system, certifications that allows us to be able to play on the same level. And I think one thing that changed the landscape in Ghana, especially, had to do with the regulations that came from the central bank and the law that was passed, which requires us to be able to do certain things. And in doing that and putting that infrastructure, build confidence with our partners. So we don't so even with the design of our technology, we have risk as part of it. And we have units that will actually check what the engineers have done in terms of process, in terms of how they do their design, how we split responsibilities, and also the certification that constantly ensure that you are actually maintaining what you have started. So for us, governance is very important. And after governance, then we come to our system that allows us to be able to protect data, allows us to be able to protect the transactions, and with the current technology, allows us to be able to monitor patterns, so that in case there are things, we can easily pick them up. And so there are times that we will actually be in a position to inform our partners that there is a problem. And they knowing that there is a problem gives confidence to them that they are working with a trusted partner. But when it comes to the fintech environment, it is not always that you have an idea and you want to implement, that you can put all this together before you actually start. I mean, when we started eTransact and Co., when we started, there was no law. We worked with what we thought was the best. So working with especially the financial institutions, there's mistrust. But once you sit down and explain what you are trying to do, and they look at the risk that it will bring up, and then what you are putting in place to mitigate that, then it brings confidence in the relationship. So over the years, we've moved from nobody knowing us. I remember I walked into a bank, a boardroom, because we were having a problem, and we had actually been there to tell them a problem that we thought they had, that we had a solution, and they just rubbished us. And then one of our clients, which was a university, had threatened the bank to move the account unless they use the technology that we were bringing. So they called us back. When we got into that room and we started the discussion, there was somebody there who was moving from that bank to another bank, and quickly went and alerted the other bank that, hey, if you don't sign these guys on, you're going to have a problem. But that other bank was the first one we have seen. We had actually worked with. I don't want to mention names. So with that, after we explained what we're trying to do and we tested it with them, they realized that the risk that they were envisaging was actually not there, because we're not actually coming into the bank to take anything, but allowing the bank to come to our platform to take data. and allow people to pay. We did not have good electricity, good data. We didn't exist. But we created an infrastructure that allowed the banks to go and use the data from school into our platform, and then exchange data to be able to send data to the school to ensure that when the student says that he has paid, he has actually paid. So that created a bit of confidence with them, and with that, when mobile money came, we were able to scale with that. Yeah.
Okay, so it's because you had that experience actually that you got trusted.
Yes.
Okay, well done, thank you. Okay, so finally, Corinne, so you mentioned that you're focusing on digital mass acceleration, okay? The topic is also about making sure that we accelerate financial inclusion, because at the end of the day, I think we all agree that the best way to get there is to make sure that we enable those partnerships between the different stakeholders. But why is it important for you to advocate the acceleration of financial inclusion, and how would you define the role of each stakeholder within this ecosystem?
Well, I will take an example, right? At the beginning you said, please, if you complain about the bank, don't talk about EcoBank because I don't want to lose my job, right? The challenge is that when you work for an American company, you are tagged American. If you work for any organization, there is a limit in what you can say. And I think after 25 years in Africa, I'm free today to say exactly what I believe can help the continent. We all talk about ecosystem. We all talk about the need of collaboration. And honestly, let us recognize something extremely good in what the government of Ghana is doing here, pulling everyone just to discuss. Because wealth is about, knowledge, and we are passing it on. Let me bring down my comment down for a layman person, and I will take two personal. What is our economy in Africa? It's the market, the lady in the market, the man in the market, right? Those are African micro SMEs. Who creates most employment in Africa? The individuals. You have a woman selling something in the market, then she hires the brother-in-law, the sister-in-law, the husband, etc. And this is how you grow the wealth, right? And the reality in Africa is that our premium, whether, like the 0.5 or 2% of wealthy population, they are overserved. And you take all the global corporate who generate maximum of revenue, they're also banking overserved. So when you talk about financial inclusion, you talk about African problem that only African can solve. Because the rest, they're okay with already what is there. That's one point where is the business opportunity is there. And this is why you see the growth of African banks who started by focusing on those underserved people. And you can see in every single country in Africa, the national local bank have taken over all the global bank when it comes to asset today. You go to the technology where fintech, and this is where I talk about solution when it comes to innovation. Technology, we don't reinvent the wheel. It's exactly the same in Singapore, in the US, wherever you are in the world is the same technology. Most of the time, our fintechs on the continent, they focus a lot on the technology and the problem I'm solving for, which is extremely good. But when it comes to market and scale, it only counts for 5 or 10% of the reality. Why? You have to take risk into consideration because we do not operate alone, right? There are some rules when it comes to finance, and this is why we're afraid about the bank, and even worse about the central bank. But they have to do that because they have to protect the customer, right? You come to technology, the problem is not the cloud technology, because I belong to the area where we move from on-premise to cloud when it comes to technology, right? And I have regulators who challenge the system and they went cloud. And those examples are in Africa. So technology is not the issue, right? But it's really how do we secure? Sometimes regulators want to access bank operation to make an audit or an investigation, and then they are told, no, our system is there and you cannot access. Then you remove away the role of the regulator, right? What are the guarantees we are bringing? FinTech think technology, but understand that for your product to go to market and to scale, there are lots of protection that needs to happen, and this is the role of the bank, the role of the regulator. If I move to the bank now, the bank, they overcheck. We talked about know your customer, right? A bank will check and check with request. So even what is called digital is not digital anymore. Not later than yesterday, I downloaded an application, provided all the information. The bank has my KYC, everything, but they asked me to come at the branch to activate what I've downloaded, and that's not digital. What if I only limit on that little ecosystem, and you take a fintech, you say, okay, I want to see your risk. The MD is going to come, the founder is going to pump. The same founder is the strategy, is the risk director, he's the compliance director, he's the finance director, red flag. But they need the support, and the solution will not come isolated. There is someone that needs to explain to all those parties why is it important for you all to come in the room. If you want to solve, let us say, just access to finance, credit scoring, we have a reality on the continent. Mobile rail is the technology way to go for. That's the reality. For 60 years, banks, they haven't been able to penetrate for more than 20% or 30%. But mobile money, in less than 10 years, they have penetrated. There are some countries, like Kenya, where I am resident, they're already to that 90%, or if not even more, financial inclusion. So financial inclusion is not a problem anymore there. So this is exactly why that advocacy is extremely important, but sitting in the shoes of every single entities and explain to them the benefits of coming together and solve either for agriculture, solve either for education, either for health. You cannot think alone in this area. That's impossible.
Thank you very much. So I've been joking at the beginning when I said do not mention EcoBank, but I think most of the bank really now understand that it's critical to all come together. There's no other way, right? And on our side, that's why I'm there. And that's why we have many initiatives to make sure that we make it easier, including a sandbox, for example, where we are publishing our APIs to make it easy to fintechs and startups to deploy in 35 countries where we are operating. But as you say, I strongly believe that technology is not the issue. The issue is probably elsewhere. And even the MC mentioned that, I believe, when he was introducing our panel. I strongly believe that it's about trust, right? So I've been informed that we have less than 5 minutes, but we'll take a little bit more. So I just want to ask to all of you, because I want it to be concrete. How do you think we can improve trust between all the stakeholders? Because I think that's, from all what you say, that's the main issue. How can we improve trust between central banks, fintechs, telcos, all the people that are playing a role within, this space? So would I start with Valentine, maybe?
Yeah. Well, I think what we're having here is great. I think there needs to be a lot more interaction between the regulator, the banks, the fintechs. Now, the regulator is the one that basically guides everyone. But it's important also to ensure that the market operators are involved in some of the regulations, because it will help if the stakeholders are involved. What happens is that you now create regulations that even the market themselves will force you to abide. And that's why I think it's important that what we're doing here is great. We need to have a lot more interaction between all the stakeholders, and the central banks shouldn't see themselves as they know it all. There is a need for them to listen to the market. What are the risks are we trying to solve, mitigate? That need to be clear. And use even the market operators even to develop some of the challenges that they face. And I think that's, for me, one that's very great. And that's why I think this kind of audience, this kind of meetings organized by the Bank of Ghana, I think is in that line to ensure that we are all on the same page. And then when we come out with solutions, it becomes a lot easier for adoption, for everybody.
Okay, thank you. So it's about listening to the users from the central bank and making sure that we encourage this kind of initiatives. Thank you very much. Shaibu?
Yeah, it's quite a very interesting point here, right? I think trust is nurtured, but it's also founded from certain understanding, a common understanding around the objective. So I think what would set the tone for that to happen, and I agree with Valentine on this point around the regulator in terms of bringing everybody together. Over and above that, I think that we need to understand the concept of competition and how we cooperate and partner to deliver value. The very moment we start talking about the fintech is competing with me, the bank is competing with me, the DEMI is competing with me, then we lose the plot. Because this is such an untapped market. We think that we've touched it, but we've barely touched it. And for me, it's about a common understanding around why we're doing this. We're doing this to impact our communities, impact individuals, impact businesses. And the very moment we understand the bigger objective and purpose for which we are in this ecosystem, we would forge ahead and we would cooperate and we'll build a trust. I just want to use this platform to just say that from an MTN perspective, and for that matter, mobile money, we are very open to this kind of collaboration, and we are welcoming all fintech to reach out, and we would also be reaching out to you to build this ecosystem together and build a very inclusive ecosystem that we all benefit. And the value for us is to see our customers having a lot more frictionless experience on all our platforms.
And we will reach out to you as well.
Thank you.
Romeo, please.
Yes. I think it's important, just following from what has been shared, collaboration for us is partnership is the way to go. And a lot of people don't even understand the relationship that we've had with MTN over the years. At some point, people thought that ITC was part of MTN, but it was because we did not see ourselves as competitors, but as collaborators to meet the needs of the ordinary people. A lot of our solutions have been built on partnership, and I'm very passionate about one that I always talk wherever I go, informal pension system. The first informal pension system that we built in this country. ITC, MTN, Fidelity Bank, and then the regulator and the fund manager. And this, for me, touched the heart of ordinary people who hitherto did not have access to pension. Ordinary people, house helps, truck pushers, they now have access to pension. Why? because of collaborations. If ITC were to do this alone, it's not possible. We have to go for a banking license, insurance license, a broker license. It's not possible. But if we work together and the trust is there, and I don't feel that you are trying to take my ideas and just go and do it, then I'll open up. But when I have come and we've sat on the table and we've explained things, and then there is cold feet, and before I realize you are launching a product like that, then there will be a problem. So for us to be able to work together, trust, and I like what Shaibu said, needs to be nurtured. We should not just see, we are competitors. That is fine, but what is the ultimate goal? We want to ensure that our people develop wealth. We want people in Africa to be wealthy. And how do we do that? It is when we come together in trust to be able to achieve these things. So I fight for the banks a lot, but they are my partners. And I pray that we all will see ourselves not just trying to tear ourselves down, but building something that will be beneficial to all of us.
We'll get there. So it's about trust at the central bank level, at the bank level, but at the fintech level as well.
Yes.
We all need to be, confident amongst ourselves. Yeah. Thank you. And last but not least, Corinne.
I will not come back on the trust, which I totally agree, and on the collaboration, that is a must to happen. But what I will emphasize on, at the end of the day, it's about the business. And Africa, there is opportunities everywhere, and you have space for every single player everywhere. What I will maybe I will plead here, because we have participants coming from all around the world, is this morning on the first panel, we had the need of, we need to start somewhere, and I call it a corridor. You take a corridor, you do a pilot, and you scale, because when it comes to technology, it's difficult to have whatever framework of legislation or rules you can put in place, when it goes live, there are always, modifications to happen. And I will encourage the global organization to participate in those pilots, trying to solve a problem for a corridor. That's my first. We really need to focus on that. The second thought that, advice that I'm going to give is just Africa doesn't have a money problem. There is a lot of money within Africa. There is a lot of money outside of Africa, and I know that because now I'm working in the investment space. It's just lots of organizations, they have money to invest, but where are we investing? Where is that ecosystem we want to take a risk, with and try to scale? And this is where the regulator is coming, and this is where all our government entities are coming. It's just if ourselves and the entire ecosystem, if ourselves, we do not portray positively what we are achieving, who is going to do that for us? And I really encourage every single individual, let us not focus on the problem. Let us focus on the opportunity. We communicate, we solve, we collaborate, and that we brand ourselves so that we can attract more investment. And at least to scale, you need the money for that, that's for sure.
Thank you very much. The MC came on stage to tell me that we're done. I really want to thank you all for the great insight that you provided, but more specifically for not mentioning Ecobank on the bad move, so thank you very much.
Okay.
I'm very much looking forward to developing trust with all of you and make sure that we have good partnerships for the benefit of our communities, as you were saying. Thank you all very much.
Thank you.
Thank you. Thank you.
Thanks.
Thank you.
Thank you.
Lots of group photograph together.
Good to see you.
Thanks.
Hi.
Thank you.
A group photograph together, please. Madam Moderator, listening to you and your panel, I put down a few thoughts. Honestly, the role of banks has not changed significantly through the years and may not change significantly in the coming years. I say this because Bill Gates in 1994 said banking will continue to be essential, but banks will not. And so going forward, whether banking is done by banks or fintechs is not the real issue. The concern is how we can align regulation to be in lockstep with innovation to protect all who play in the digital and financial space. And if we do that with the concern of the customer in mind, I believe it will help engender trust and create efficiency for the customer. These are my humble thoughts from their submission. Which leads us to one very important area which we need to also understand: interoperability, how systems work together. For the next few minutes, it's my pleasure to invite for a fireside conversation on interoperability our Director for FinTech and Innovation at the Bank of Ghana. He will be in conversation with the Group Chief Executive Officer of MTN FinTech. Ladies and gentlemen, make welcome Kwame Opong and Serigne Diom. I think there's a short video that precedes this, if you have it ready.
She's coming. She's coming.
Oh, it's in.
Red Recito!
Boss, like my bag.
Here, take this.
She's coming.
I know. Go to the pharmacy now.
She's coming. Oh.
She's here. Pay faster, pay safer, and pay easy with Momo app. Download now and pay with the QR code, merchant ID, and so much more.
Good afternoon, everyone. And once again, welcome to the 3i Africa Summit. So today we're going to have a very interesting conversation with the Group Chief Executive of the MTN FinTech. And Serene, I think for most of the audience here, they might be familiar with you or may not have met you actually in real life. So before we begin, my name is Kwame Opong, the Director of FinTech and Innovation at the Bank of Ghana. That means I wear two hats, either the policeman or a cheerleader. And today I'm probably going to be both, depending on how the conversation goes. But before we start, let me ask my guests to introduce yourself and tell us a bit about your history and your journey to MTN FinTech.
So thank you very much, Kwame. Good afternoon, everyone. So my name is Serine Dioum. I'm Senegalese, from the neighborhood, and where the jollof rice is coming from. And I'm the Group Chief Executive Officer for MTN Group FinTech. And I'm working for MTN since 2009 and have been doing FinTech the last 15 years with MTN, and joined MTN, started the journey when we had 500,000 customers to now we have more than 70 million. And my journey with MTN has been being internally in MTN and trying to build a FinTech business inside MTN. And when we saw that it became a very big business, we started to separate it from the telecom business, and now it has been separated at group level, but also in the operations where we do have also separated FinTech businesses regulated by the central bank. So today, MTN FinTech is a business that generated more than $1 billion US last year, and with more than 70 million active customers who are using our offers every month. And also with a big ecosystem that we have been building also with more than 2 million merchants across our footprint. So this is overall my journey and also where we are on MTN FinTech.
Thank you very much. And it's interesting to hear that you made reference to the 500,000 number that you had earlier. I think going around, we had a tour of the Innovation Hub with the governor and visiting governors and the Minister of Communication. And one of the things I noticed is that many of the folks in there were there during the early days as well. And I think to some extent they formed a bond of brotherhood in the trauma of an unsuccessful mobile money ecosystem here in Ghana until things turned around. But now we're seeing the global data. You have about 642 million active customers on a 90-day basis. Globally, you have about $1.4 trillion in transactions, and about 74 billion of that being merchant payments. What is behind this growth in mobile money?
So the growth in mobile money is being driven by several levers. And the first one, and which is the most important one, is the investment. So as MTN, we have been investing a lot on mobile money since its beginnings. So we launched here back in 2009, and before we became profitable, we invested a lot, and we were interested more on driving the business, scaling it, building the user base, rather than trying to be profitable. And that was done for more than 5 years before we became profitable. So I would say that the first one is the investment that MTN, who believed that was in a good position to drive fintech business, invested into the business to be where it is today. The second one is the gap that we saw in terms of financial inclusion. I mean, the unbanked population in Africa is huge. And also, on the other side, you saw that there is a huge penetration, almost 80% of Africans who have a phone. So we thought that by providing to people who are unbanked and who have a phone, a way to be involved and financially included was something that has a great potential. I would say the potential is the second one. And the third one is really also the strategies that we have, where we've sit together and we've talked about what are the needs for Africans in terms of financial inclusion. And we realized that everyone needed to have a wallet. And also we realized that you have a lot of businesses that also needed to have accept the payment and to be paid digitally. And the third one is we know that lending is underpenetrated in Africa. Only 4% of the adult population have access to lending. And a lot of people do need lending for their own personal needs or as a business. And the fourth one is around also what we call insurance, InsurTech. So InsurTech also is really underpenetrated. Only 6% of the population is insured. And the last one is international remittance. Trade in Africa between companies, between different countries is really very painful. Sending money within Africa is the most expensive and painful exercise. So then we told to ourselves that by putting together a strategy that would help people to be able to have a wallet for merchants to be able to accept payment, but also for people to be able to be insured, people who need loans to be able to get access to loan, and international remittance, people to be able to send money from abroad when you're in your country, or if you want to send to another country, when you're in a particular country, would be something. And we are building our strategy around that, and this is what we offer to people. And our ambition is really to offer first-class financial services to our people in Africa so that they don't need to, if someone else comes from outside, they already see that people have already access to that. This is really our ambition, and we feel that it is what is also driving our growth.
Wonderful, very interesting, and I think the investment story there is a powerful one, and also I see a clear effort to build value in order to be able to sustain the growth and the future potential of the business. But let's look at it from an impact perspective. Because often we do see, we see the numbers and you see the volumes and the values and the agent. What is the real impact story there, right? Because if you look at the data I mentioned, if you have 1.4 trillion in transaction value globally being mobile money transactions and only 74 billion being merchant payment, that says to me that perhaps we're not quite scratching the surface of the one big transaction type that most people are involved in and most people are looking at. So this is about 5% of it. But generally in a person's life, paying for goods and services is a very high frequent activity. So that's one of the things perhaps I wanted to find out from you. What is the impact story there? Because as you know, from a policy standpoint, we're all pushing Cashlight agenda. We're trying to help MSMEs grow. What is the story from an MTN perspective when it comes to that?
So thank you very much, Kwame. And I'm very happy to talk about impact that we are making because I think, I'm very proud of being part of this journey of putting together and, developing for MTN this fintech business because for me, despite the economic success, the impact that we are making to people is huge. And for me, this is what is making me proud and also making me waking up every day to go and do what am I doing. And this sentiment is reinforced when I visit markets like Ghana or when I go to Rwanda or some other markets and when I meet with people who have been impacted by what we are doing. And let me give you some examples. We, in our documents that we present to investors, there is one story that we always tell to people, which is someone we call Kafui, who is a Ghanaian lady living in Takoradi, that we met with when we visited the market. And we saw that she has a business, and she does have a wallet, consumer wallet, but also she has a merchant account. And she took loan to start his business with MTN, and starting with something very small, buying vegetables every day, in the morning, selling them, making some money and paying back and doing it every day. And she started saving as well, which allowed her to have her own capital, and now she's not taking a loan anymore. And she does have also a sister in Ivory Coast, and she's sending money to her and looking after her family and paying for school fees using mobile money. So that was very impactful and really gave me more energy to continue doing what I do. And the stories like that are very important. And we do see, the advert that we saw before we started, where someone was getting a newborn and being able to use his mobile money wallet to make all his payment and avoid the hassles and to be able to be there in time is something very important. And these stories are things that are happening every day. And if you look at also, we also help a lot of, one thing that I like most also is the impact that we are having sometimes on rural populations. So you know that we in a lot of countries, we are partnering with some solar companies. And those solar companies are giving solar panels to some very remote areas, and we do it in a lot of countries. And they allow to give light to people. And it is the first time that those people have access to light. And when you have light, it helps them also for the education, for children in the evening to be able to continue working. And when also people, they pay for that, they pay with mobile money, and after that they are able to upgrade and to start having TV or radio and to really increase their lifestyle. So when I see those stories, it is really something that touched me, and I feel that the impact that we are making is huge. And also, it gives me more energy because it show to me also the potential we have. We are very proud of where we are today, but we know that also we have a lot to build. And if you look at the expectations of our people on financial services, is something that really very important. And just to finish, I feel that for me, our purpose is to give dignity to people. And what we call dignity for people is when you see someone who is financially independent. That is very important because most of the time, when you do financial services, people are giving loan to people and those type. But for me, if you give someone loan, but you push that person also to build a business and to be able to save and to have his own capital and to be financially independent and to be able to fulfill the duties and also to be able to pay for his family, to support his family, it is where I'm becoming very proud and it is where we want to be. So I think to summarize, the impact we are making is really to make sure that we give dignity to as much as people in our continent.
Very interesting, very powerful examples there. And your point on dignity, that the access to financial services can provide is very important. Because ultimately, I think for us from a policy standpoint, and I think for society's perspective, that is what we're hoping to see. But let me ask this question, because back in Ghana's journey, if you look at the performance of the industry and you look at the evolution of policy, we see the inflection points of the growth and even investment sort of correlating with regulatory interventions, engagements to understand how we improve the regulatory environment, and it's triggered other things, right? An investment and leads to growth. Obviously, that has been discussed this morning, so we're not going to go into that too much. I think this whole conference is premised on that same goal. But from your perspective, seeing as, in spite of what you described, the gap is still wide, right? So if you look again at the transactions that are happening, the use cases, the adoption of some of these services, we're still significantly behind. What is that secret sauce or combination of sauces that can get us to that point where we're seeing very rapid and radical growth in addressing our cash light and policy objectives?
No, thank you very much. And before I talk about that, I would like just to acknowledge also the great work that the Central Bank of Ghana is doing.
I'm still going to come back with the hard questions, though.
So, and I mean, it's when you see countries where the scale or the penetration of financial services is important. Most of the time when you look at, you would see the signals that the regulators has played a very big role on that. Otherwise, it doesn't work. So, and I think we have been working with the Central Bank of Ghana here since we've started and leveraging licenses from commercial banks until the Bank of Ghana decided to issue licenses for us when the business started to grow. So for sure, I think Central Bank of Ghana has been, Bank of Ghana, a very big contributor to where we are today. And I think we need to acknowledge that Ghana is one of the countries where you have the biggest penetration of mobile money in the world, and also where you have a very big penetration of transaction if you compare to GDP. So that is, I think, people who are Ghanaian in this room can be proud of that. And maybe to answer to your question, I think that there is we still have some room of improvement in terms of policy making, and I think there is a good step by creating the department that you are heading, which is the FinTech one, which is really allowing the Bank of Ghana to focus on FinTech needs and to see how you can really help in this to enable fintechs more. So usually I don't see regulators as policy makers, because I don't like the term policy, but I see them as enablers. And I think where we need a little bit more to be lifted a bit is around for us to be able to have access to more advanced services. So you talked about the penetration or the adoption of some of the advanced services that we've launched. But one of the gaps that we see is that to launch something like advanced services, it is very painful sometimes for us because we need to go through a partner to go through. I think the same way as the central bank, so that there was a need to issue a license dedicated to us. Today, we are also coming to a situation where there is a need to see how we can upgrade the type of license we have to be able to access to some more advanced services that I think people deserve to have those advanced services and to be able to adopt it. I think this is something that we see that we feel that the Bank of Ghana could support the fintech community to be there. But I think something that I would like also to talk about is the fact that we feel as Mobile Money Ghana Limited that we are positioning ourselves as a platform. And when we talk about platform, before we used to call ourselves mobile money service provider. And being a mobile money service provider, we used to work on services and we used to want to do everything. Every single thing that we used to propose to our customers, we used to want to do them from the beginning to the end. We shifted our strategy from 5 years ago, where we told ourselves that the role we are playing in Ghana and in the rest of the continent, if we want that role to be bigger, we needed to position ourselves as a platform. And being a platform, you consider equally your customers and your partners. And if you look at the last 3 or 4 years, you would see that we've launched some product like Open API, where we say whoever is a fintech in Ghana and want to get access to our customers, want to get access to our merchant or our agents, we open our APIs and they're able to develop on top of our APIs to be able to, they have a sandbox, they can test it, and when they're ready, it takes 2 or 3 days for the service to be activated. For us, that was a very big milestone to position ourselves as a platform business and to see that everyone who is doing fintech in this country can be a partner with us. And I wait my word, everyone. When I say that, the banks, we don't see the banks as competitors. We see the banks as partners. And if you look at every single bank, we are partnering with 16 banks in Ghana. And most of the fintech also are partnering with us. So this is really, I think, something that people need to understand, that we are positioning ourselves as a platform. And we are doing whatever we can to help others also because of the position where we are today, so that people can get access to our customers, people can access to our merchant, to our ecosystem, to develop their own services on top of that.
Thank you very much. That was a very artful way of addressing the elephant in the room, because I think ultimately the size of any operation, when it gets to a certain level, presents certain competition concerns, not just in Ghana, but I think across the region. And so what I hear you say is that your strategy is to position yourself as a platform as opposed to, I think, your previous form, in a way that your growth impacts the ecosystem as well. So I think the audience will be holding you to that. There are lots of innovations and potential partners in there who would be looking to take advantage of that. But thank you very much, Serene. We are going to have a very interesting discussion outside of here regarding Jollof. Perhaps I should apologize on behalf of Ghana and Nigeria for making claims that don't belong to us. But thank you very much. It's been a pleasure speaking with you. And thank you very much to the audience as well.
Thank
Good
you.
afternoon.
It was a pleasure. Thank you so much.
Ladies and gentlemen, a round of applause. 100 million fintech subscribers across their markets by 2025 to lead digital solutions for Africa's progress, simply because everybody deserves the benefits of a modern connected life. Let's give it up to our lead sponsors, MTN, their subsidiary MTN Mobile Money, and MTN Fintech. Please let it be loud. Many thanks to you, Kwame Opong, together with Mr. Seringde Diom. And so, ladies and gentlemen, if we've come this far, 2 days, it's because of the collaboration between our partners, Bank of Ghana, the Development Bank Ghana, the Monetary Authority of Singapore, and Elevandi, their subsidiary. But it's also not complete without our sponsors, who have also come in very handy to lend us their support. For the next few minutes, I ask that we acknowledge them for their contribution. We're grateful to all our sponsors thus far. Do we have the video ready? Okay.
Oh, my, oh. Everybody thinks my life just be enjoyment. Like you, I have to try over and over again to make it.
Yo, Kitty, waiting on a new hit.
Yeah, waiting, Kitty. It helps when I don't have to worry about everyday stuff like banking.
New message.
So I can focus and make great music for my fans. Fidelity Digital Banking fills me with enjoyment.
Try Fidelity Digital Banking today and make it happen with Fidelity Bank, because together we are more.
Fidelity Bank. Believe with us.
When was the last time your mind had a break? I mean a real break, where you didn't constantly worry. Not breaks like being on the golf course but missing easy parts because you were distracted by failed transactions. Or when you're with family, but pressure from work prevents you from bonding with those you love. Or perhaps when meeting clients, but thoughts of system downtimes put you off your game. Well, we say next time you're on the golf course, focus on making par, get that birdie, and that family barbecue. Focus on getting the ribs tender the way Junior likes it. We process digital payments for your business. On your next business trip, soak in the views and focus on closing deals. We process digital payments for your business across Africa. Live, work, play a little without sweating over payments processing for your business with Insano. You are in good hands.
Okay, bring it down. Obsidian, Achina, Payaza Africa Limited, Fido, PwC, Insano Limited, IT Consortium, GCB Bank, Fidelity Bank Ghana, Consolidated Bank Ghana, Mobile Money Limited, and MTN Ghana, please. Thank you very much. The last conversation for this afternoon will be centered around understanding the barriers and opportunities of investing in Africa. It will last for 30 minutes, after which we shall take closing remarks and we'll be out for lunch. Is that agreeable? Is a good deal? Okay, then please welcome my panelists, Sheila Okiro, Chief Investment Officer, Coordinator, Africa Digital Financial Inclusion Facility, Financial Intermediation and Inclusion Division of the Africa Development Bank. In short, she's a big woman. Please, a round of applause. Marianne McIntosh Robinson is the President of Quenta Incorporated. Please welcome her too. Dr. Graham Bright is the Head of Compliance and Operations, Euro Exim Bank. Mr. Stefan Kletsil is the Chief Executive Officer of Speed Invest. And moderating this panel, ladies and gentlemen, the Chief Executive Officer of the Ghana Investment Promotion Center, Mr. Reginald Yofi Grant.
Thank you very much. And it's indeed a pleasure to be here. Good afternoon to you all. Oh, it's working. We are a very powerful panel right now because we are standing between you and lunch. so you have to be good to us. And good afternoon to my very illustrious and very well accomplished panelists. I think that the Africa story has always been a good story. I mean, we hear of Africa's opportunities, and everybody agrees that Africa is the next investment destination. Not less than 40% of the world's remaining mineral resources, 65% of the world's remaining arable land for cultivation, growing population, the youngest in the world, and many good things. The fastest urbanizing by 2030, 17 cities in Africa will have more than 5 million people. So there's no doubt that Africa stands supreme in terms of investment opportunity, etc., etc. But yet still, year in, year out, we've seen foreign direct investment to the continent declining. And one may ask, if Africa is so important as an investment destination, how is it possible that FDI is declining? And so this afternoon, we are going to have a conversation, more like a conversation than anything else, about the opportunities, the challenges, the risks, and all the things that we ought to understand about Africa's, opportunity that has not been achieved. We always hear, yeah, Africa, yay, Africa. Yet when it's time for the rubber to hit the road, screeches. So let's have this conversation. But we'll focus primarily on the technology space as well. Some few figures to guide us. Africa's annual financing in venture capital has risen from 2 billion in 2019 to 5 billion in 2022, according to BPI France 2023 results. Now, despite this growth, the amounts invested remain modest compared to the continent's population of about 1.4 billion. The continent has received about 20 billion in VC or venture capital funding over the last 10 years, 68% of it between 2020 and 2022. For comparison, this is 9 billion less than the VC funds invested in American startups in 2006 alone. American startups in 2022 attracted 240 billion compared to 3.3 billion in Africa. So you see how it's tipped. Now, total investment into the Africa tech startup ecosystem fell by 27.8% to 2.4 billion in 2023, according to Disrupt Africa's Tech Startups Funding Report. So today, between myself and the panel, we are going to have some conversations on what the issues are and how we can overcome these issues. At the end of the day, we don't want another talk shop. We want delivery, we want impact. So I'll start with Sheila, and please introduce yourself. And we have only 30 minutes, perhaps by now 25. So if you can, in 30 seconds, introduce yourself, and then I'll ask you the question, your first question.
Thank you. So I'm Sheila Okiro. I'm a Chief Investment Officer at the African Development Bank. I also coordinate the Africa Digital Financial Inclusion Facility, which is a vehicle that the bank is using to catalyze investments towards adoption of digital services. Thank you.
Great. Okay, and in your work at ADB, under the African Digital Inclusion Facility, which seeks to invest in catalytic digital services, do the challenges and opportunities highlighted throughout this conference, we've heard many people speak yesterday and today, do they actually reflect the reality on the ground?
I mean, absolutely. To be honest with you, yesterday as I was listening to the speakers, I was like, okay, my points are already on the, they've already been highlighted. But, that is the reality, because for us, beyond the strategic, we now try to make the actual investments and see, what is able to actually pass through our processes. Now, at the African Development Bank, as you can imagine, we are operating at the macro level, but for
is how can we support, for example, the public sector, the digital economy that is not usually well integrated unless you put a big structure that my local people How do they get to and so that's what I'm trying to do. Because the families that commission are very so capacity for
issue. The other aspect is economies of scale. For digital projects to actually be attractive, they need to be able to demonstrate how they're going to have impact. So that is, another issue. I think the speaker yesterday from the World Bank was very clear. He talked about bankability. When all is said and done, and you come down to doing the proposal, the question is, okay, we need to do the initial vetting. Most will not meet, for example, the lending criteria. So you already have to look at concessional type of lending. And already the interest starts waning because bankability becomes important. Now, the other challenges around fairness, cost, looking at the wider ecosystem that is excluded, whether it's in the agriculture space or gender, those challenges are very real. Now, with regards to the opportunities, I think it cannot be gainsaid. It's all been said here. Africa has the largest youth population, and that is growing. And this youthful population is also technology adapt. What basically that means is that they are going to take this, they're going to amplify this to the third and fourth level, and it's already happening. If we just pay attention, it's actually happening. Whether it's on the social space, when you look at content creators and what they're doing, whether it's in the entertainment space, it's happening in a big way. Even if you look at the news today. I mean, I'm not from West Africa, but I'm living in West Africa for work. And I'll be honest with you, most of the information I get, about what's happening at home would now be on YouTube rather than the mainstream. So these realities are happening. And for me, that is a clear demonstration that there's a huge opportunity within Africa because you have a ready market. Now, the other issue is around cost and affordability. The proliferation of smartphones, for example, it's a game changer. And we can see conversations around making them more affordable so that you do reach the last mile. So I think the ecosystem, what is happening, is really critical. And most importantly, what we have seen today, the level of engagement of public sector, private sector in these kind of conversations is really, for me, for those who are looking to invest, it is really where you need to pay attention because it's now being integrated and mainstreamed into the real, the macro level of economic development.
Great. I mean, you speak about the opportunity and the fact that you have the youth bracket is huge. In fact, Africa has the largest proportion of Generation Alpha, those born after 2013. Like you said, they are really adaptable to technology. So let me go to Stefan. Stefan, you have actually put money on the ground. So are you achieving comparative returns from Africa compared to your other investments in other regions?
So maybe just as a way of quick intro, we're Speed Invest. I run the fintech practice. We are European at origin and have started to invest outside of Europe a few years back. So in Africa, we did our first investment in 2018. And we have about 10 investments now in Africa. And we're super happy with the portfolio. So the performance, operationally but also financially, is actually better than if you compare it to just the fintech portion of our European funds. And this is not because the European funds are not performing. They're performing quite well. But the investments, including Africa, are actually outperforming the European ones. Now, we have to be very careful. Like VC is a long game. So these are paper values. So whenever there's up rounds, of course, that creates a favorable uptick in our fund economics. At the end of the day, what counts is cash return. And we're working hard on that. And this is, of course, one of the key questions we get asked. I'm raising a fund right now. We want to deploy a lot more growth capital to African fintech and fintech-enabled businesses. The big question is, show me the exits, right?
Right.
The second biggest question is currency. Now, on the currency, there's not much that we can do sitting here. We have to just accept it. African entrepreneurs, like any other great tech entrepreneurs, they will always find a way to navigate these macro swings. But when it comes to exits, my answer is always, look, this is one of the last white spots in the world. And you will, of course, see exits. There's a certain logic that these markets, and we've seen all the numbers, are massive and a very young population, huge mobile phone penetration. Of course, there will be outsized tech companies emerging from Africa, and there will be interesting exits for investors. So that's a given. But it's an uphill battle, right? But I think with every successful up round and African companies becoming profitable, I think right now we have an issue everywhere in the world finding growth capital. I mean, that's something we really celebrate. So companies like Move or Fair Money or Hazna in Egypt and many others, Oze here in Ghana, we have an investment here, still early. When they go profitable, right, that's already like a major milestone, because then you really can manage your own destiny. And so, but by the way, I do want to say I feel very, very welcome here. It's first time for me in Ghana, and I'm shocked how friendly everyone is. And so I'm really here learning a lot, and I will come back for sure. So yeah.
Oh, great to hear
Yes,
that.
yes.
So in your work in Africa, do you see the regulators as being supportive or showstoppers or
So I'll tell you something, regulators
inquisitors?
They're always painful. If you are a tech entrepreneur, fintech entrepreneur, and you're building a business, regulators are always very hard to deal with everywhere in the world. I've come to embrace regulators. So when we talk with founders, like, look, embrace them, spend time with them, sit down with them. Most regulators are not technologists. They just do not understand the details. Just let's sit with them and understand it. So we have one very successful crypto exchange in Europe called Bitpanda. The reason we invested is because those guys actually sat with the regulators and explained it. And guess what? I mean, it's your own interest, because the regulation will end up being pretty much like, you can influence it. You can impact influence. So, but of course, I do hear, I've asked the African companies here, what are the big roadblocks you're facing? And of course, regulation comes up. It's not the regulation, it's the ad hoc change in regulation, the short-term change that can completely kill you, right? That is, they are really asking, please engage with us before you issue a new resolution, and we're very happy to work it out, right? So that is a pain. Of course, it doesn't help also to tax digital transactions, to be honest. That does not help. People are going back to cash. So there's a few things that really can be corrected pretty easily.
Well, I guess it's the labor of love, isn't it? So I now come to Mariam, and let me ask you the question, but introduce yourself before. So there are a number of fintechs in the room, and I hope quite a number of them indigenously bred. There is this view that most of the fintechs and unicorns on the African continent are from Africans in the diaspora. Does fintech bring a peculiarity, or should I say a complexity, to funding on the continent of Africa?
Okay, thank you. Afternoon, everyone. So I just wanted to quickly introduce myself. So by way of background, which will shed more light on my response to that question, I was a private equity investor across 2 growth equity funds, 425 million in assets under management into the Caribbean, which is what global investors call a frontier market, like Africa. So I did frontier market investing. Then I went into the operating role and ran a commercial bank for 7 years in Jamaica, and we transformed that bank. And then now I work for a US headquartered fintech company that has Ghanaian operations, and I see my Ghanaian team over there, hey! Right, so anyway, so here we are, and I really wanted to respond to that question from the point of view of the fintechs in the room. So as recipients of capital, we're constantly looking to raise capital to take our business to the next level. But there are peculiarities for global investors because we have two things going for us. One, we're in a frontier market, and two, fintechs tend to be early stage or high growth companies. So now they're trying to get risk-adjusted returns, and there are three things that really how to combat those issues. Number one, it's really important to go back to the basics, I like to call it. Oftentimes for fintechs, we're visionaries, we're going out and solving the world's problems, trying to make life easier, trying to bring more products and wealth to others, so financial inclusion. And so the momentum and the thrill of getting that business going, we tend to forget what are just the basics. And the basics are things like, what are the bare minimum requirements to have my business in operation? So whether it's registering with the company's office, whether it's a regulatory requirement I need to suffice or commit to, these things are important to do upfront because at some point when you have success, it can really bowl you over when you're like, oh my goodness, I forgot to do something. So the bare minimum requirements, invest in that, outsource it, but it's really important to get that done. The second thing is this whole concept of leadership. I know what I've experienced in meeting a number of fintech firms. I love this industry because there's a lot of the do well, do good going on, lots of mission-driven businesses. But at the end of the day, this whole concept of we have a lot of young leaders coming up. And leadership is a journey. And you're constantly working with stakeholders trying to convince them. So when it comes to leadership, and communication, and your word is your bond. Like integrity is not just about not stealing money. It's about when you say something, you actually deliver on it. And when you don't deliver on it, you quickly, proactively tell people why you're not delivering it, and you change the guardrail if you need to and get feedback. Those basic things that when you're coming through, now I even have some alpha fintech CEOs, right? This is very important. So getting mentors and talking to people in your ecosystem is really important so that the capital that you do get from my fellow panelists here can be put to really good use so that you get to a good outcome. And the final thing I'll just say, in terms of the peculiarities, a lot of investors are looking for exit, actually. They're worried that they're putting their money into a fintech and they can't get it out. That's not good, not a good look. So one of the ways in which you can address this is look for opportunities, as someone spoke about earlier, merging, acquisitions. Look for ways, be very, very clear on your numbers. If you don't understand it, get someone who understands it well and can explain it to you because you must and should understand it. So you can figure out if you can refinance your business and refinance the equity owner out. And then similar to Jamaica, in some of our countries, what Jamaica has done is they've put in a junior stock exchange to facilitate SMEs being able to list at smaller amounts and get tax incentives. And that has really helped the value chain for people being able to exit. So the more we can look at how to exit and address that going forward, the better. And then the final, last resort on exit, you can offer a put option. What does that mean? You can ask your investor, you can say, I'm giving you a put option. If you give me $1, you have the option to put to me your request to take out your equity at $1.10 or something. But in order to really offer that up, which is a last resort, you must know your projections and stand by them. They can't be the pie-in-the-sky ones. They have to be the ones that you really think you can achieve. So there are peculiarities, but there are ways to get around it, and there are many that have done well.
Okay, so I'm going to ask you and Stefan a question. Give me a 10-second answer. Startup, growth, scale up. Which is which? Where would you put the money?
Where would we what, sorry?
Startup,
yeah.
Scale up, and growth capital. So scale up and growth capital are very aligned. So where would you put the money?
Where would I put the money? Yeah, so one day I'm going to raise a fund because everybody tells me I should. If I were putting money, I would do growth equity. There is the person who you met on the stage who's doing angel investing. That is critical for our ecosystem. Then you have venture capital, which I think Stefan may talk about. And then I would do growth. And scale up is more around the buyout funds. And that's where you get debt layered in. And we need patient capitals, fintechs in the room. So bank debt is always available to us. But the more you can get equity investors to come in with some of the tips we just spoke about and we'll speak about, that is easier to balance and ensure you have an efficient capital structure.
So, Stefan.
I think I come from the early stages, but for the next fund we're raising, we actually have more of an early growth strategy. So you have a lot of A, B companies that are actually great, downside protected, some of them profitable, but there's nowhere to go. They want to expand, they want to internationalize. You know, I think in Africa, just as in Europe, in order to become really meaningful in size, you need to be in multiple countries. And in fintech, that's super hard, as you know. So there will be great merger and acquisitions opportunities on a share basis, in many cases, which is like 1 + 1 is 5, for sure. So right now, I would bet on a mix of, taking a mix of primary and secondary. There's a lot of people who want liquidity at the moment. Nothing unfair, just, last round, whatever, little discount. Take a strong position, go into the board, roll up the sleeves and do what we always do, like work super hard with the co-investors, with the founders, and also apply a few PE tactics, I would call it, yeah. So more M&A, secondaries, and just really get it into a size where especially US investors will be interested again, because let's not kid ourselves, most of the up rounds have been produced by US growth funds. That's just the reality, right?
So I jump on that to Graham.
Thank you.
I mean, you've just had the two answers.
Yes.
And you know that Africa is beset with loads of severe supply chain issues. So, gaps on top of that. And of course, there's a global economic and political disruptions taking place today. If you were to invest, where would you invest? Considering there are two answers, what would be your primary interest area?
Okay.
Bear in mind, there are young people here who are looking for capital.
We are talking to the wrong bank if you want us to lend to anybody. So let's get that very straight right at the beginning. So first of all, can I just ask the audience, if you are an SME, if you're a company who are doing import, put your hand up. Okay, this is great. So you are not my market. So let's just look at some of the conditions around supply chains if you were to import from anywhere. Now, I work for Euro Exim Bank. We currently cover 200 countries. We have agents and partners around the world helping corporates, SMEs, to do import of goods. And we know that there is a growing market and a disruption in the whole of the supply chain at the moment. We can't get goods, certainly, from other countries where there's a geopolitical problem. There are international conflicts which are affecting many countries internationally. We hear about the big ones, the international problems, but even in Africa, there are 35 current in-country war conflicts. Now, that makes it very complicated if you're trying to build a business, get your raw materials, create something, and then export. So there are some key problems around. And it's very similar. Our bank is incepted in St. Lucia in the Caribbean, a set of islands, trade gaps, there's tourism, but very little apart from what we're exporting. We have to import everything. And that causes a balance of payments gap, a trade gap, and that's colossal. So how do we make businesses more effective? How do we get inbound investment into these things? Certainly in world markets at the moment, we know that China used to be 95% self-sufficient. They grew everything. They made everything. They had it all in their domestic markets. Today, and that was only 10 years ago, today, that figure is 65%. They have changed their economic model. They've got to import much more than they used to. They've moved people off the land into cities, purpose-built cities there. The diet has changed. It's become non-wheat based and rice, but more meat based. So they're having to find new industries very, very quickly and to scale up. But they're spending 15% of GDP on new infrastructure. Africa spends 4%. So you can tell immediately that there is an issue, the disparity. So where are the opportunities? With Ukraine and wheat and food production in a great deal of problem at the moment, and Africa, the new breadbasket of the world, with great opportunity, production opportunities. We're looking at productivity increases by use with fintechs as well. And it's really important to look at how crops are grown. What's the best way to apply the fertilizer? But also where you get the fertilizer coming in as well. So there are opportunity to replace the supply chain that was around from other countries and be a primary source of investment into the agricultural industry. That's a key one. The next one is you're very well aware, and you'll be often told, that Africa is very good at mining various minerals, precious raw materials in the ground. However, Africa does not get the economic benefit of those raw materials because they are extracted and exported, where then the value of that good is increased dramatically as it becomes part of your iPhone or it becomes part of another process. But the true economic benefit does not derive to the country who's actually brought it out of the ground. And the reason for that is the infrastructure around that process to be able to process the physical goods and increase the value closer to the point of production. So there are many different areas, so we've got agriculture, certainly infrastructure, and being able to make investments there. These are long-term investments. And the key to the whole process is changing the perception of the outside markets. Because unless that changes, then Africa will be in exactly the same position as it was. What we need to do, and I've seen it from our perspective, I'm head of compliance. Somebody says, I want to do a trade with a particular country in Africa, and immediately it's, nope, can't do it. Why not? Because apparently there's no liquidity in the local market, access to dollars is very expensive. Yes, we can send dollars in, we can't get them back out again. Infrastructure, as we mentioned, corruption, fraud, the complexity of instruments, all of this counters to people being very tunneled in their vision. So what we would advocate as a bank from a very similar type of environment, so the Caribbean region, very similar to the 54 countries of Africa, is to actually have much more collaboration between, use the agreements which are in place as well, to ensure if you're doing international trade, you work through chambers of commerce. You look at the education on how the instruments work, and you provide value, perception, and trust. And I know that's one of the key points that's been put forward throughout the whole of the conference. For us, forget about 700 million mobile phones. There are still 300 million people in Africa with no electricity. Unbelievable. 5% of all GDP of Africa goes towards sanitizing water. Incredible situation. But we need also to have that education of people as well. I am Generation Z plus 10, because look, I've got the white hair to prove it. So what it is, people are not coming into the industry. We're a dying breed in this banking, trade industry. We need young people to come into it. It's a great industry to be in. It covers accountancy, law, financial, interrogation, etc. There's so many different facets to the whole thing. But SMEs drive world economies. And that's why it's so important to the whole continent to be finding out that your neighbor is the one you should be doing business with and finding a way to do it overall.
I think you make a very good case for the AFCFTA.
Thank you.
But infrastructure still maintained, is a problem. Yeah. The logistics value chain is still a problem. Connectivity on the continent is still a problem. Do you see the Africa opportunity as being beyond Africa? So for Europe, is the AFCFTA an opportunity or a threat?
I would see it as a great opportunity, because if you have a collective like the United Nations, it's as good as that, because it means that you have standardization, rationalization of process, reusability of process as well. And if that's the case, we would not have the problem of having 54 regulatory environments, 20 central banks, etc., a number of stock exchanges, each with their own particular way of working. Remember this, regulation changes somewhere in the world every 2 minutes. Every 2 minutes, somewhere a regulation is changing. We operate in 200 countries. We have the You could say it's one of the best things of all. Great news, we operate in so many. Terrible news, we operate in so many. And we have to look at every single scenario, every single time. Who is a buyer? Who is a seller? Who is authorized to sell? Who are the banks in the particular process involved in this? Can we trust everybody in the process? It's not just about digital trust. This is seeing people who have the means and the intent to pay at the end of a transaction. Last week, on my mobile phone, I received a request to open a bank account for a company who said they had assets of $1.3 trillion, controlled by one person. He wants access to all currencies, regardless of amount. And this is the problem we're getting. It came from an African country, and immediately it's the perception that there is fraud and determination to find a way to move money illegally. Now, we have to report everything to a regulator, every single transaction. Have we done our due diligence correctly? Is the compliance really up to scratch on that? So we have to put in immediate reports of fraud taking place. And that's why it's so interesting, is it's such a daily basis. The job changes almost every day. And like Stefan said, before I go on and take too much time, this is my first trip also to Ghana. I've been involved in Africa when I was working for SWIFT from 1985. We managed to put SWIFT into most countries of Africa at that time. I changed my role and started working with the Bank of England. In those days, no mobile phones. It was telex only. That's how old I am. Now, here you are with your mobile phone. You can talk to anybody in the world. You can pay anybody immediately. But remember the supply chain, those trucks coming from somewhere on a road which is not made up well. It's coming 10 days later. You've done a transaction in 1 second. And here on your super highway of digital, and on the other highway, it's not a highway at all. It's a low way, because it's taking a trunk road, a country road, to move your goods. So next time you order from Amazon, just think about the logistics that go behind it to deliver it to your door in a very, very short time. But it doesn't always work.
And I thought VC is hard, yeah. So I'll stay in my sector. Okay, that's fine.
Saying that, I'm going to ask a general question, and I want each of you's opinion. So as I started, Africa, great opportunities, youngest population, fastest growing. We all acknowledge that. It has most of the world's minerals, especially those required now for energy transitions. It has a growing population. By 2050, Africa will be 1/4 of the world's population. I mean, if you're a businessman and you're not in that market, you're not on the globe. So in your opinions, why is it that FDI to the continent is decreasing? It's only 3% of the global, FDI. Why do you think it's decreasing? And what do you think the continent can do to increase that? Considering that everybody recognizes that that is where the opportunity is. And every year, Africans are called to conferences globally, whether it's FOCAC in China, TICAD in Japan, Compact with Africa in Germany, the Africa-UK Business Forum in France. Every country wants to have an engagement with Africa. Yet, we are seeing foreign direct investment decrease. Sheila.
Thank you. From a digital perspective, I think what I would say is it's really critical that partnerships are actually developed for sustainability. Because when we look at the digital space, I think what many people in the investment space are looking for is impact. A lot has been said, in terms of what digital can do, and a lot of investment has also gone into it, but the impact may not really be tallying. So the question is, the African ecosystem particularly, when you look at the public sector, they need to get more involved. What do I mean by that? A lot of the digital growth that you have seen on the continent has been driven by public sector. So the PPP partnerships really, become integral. When they talk about digital public infrastructure, and it has been said over and over, over the last 2 days, they really need to look at it as something that they need. Yes, Graham, you're absolutely right. The traditional roads need to be there, but the digital highway is also very critical. It's not a nice to have, and the ecosystem needs to come together to make sure that it's actually done. The other issue is governance. and bankability, the soft issues, the capacity building. That not enough time is being taken to get get to the growth stage. Not enough time is being spent. And I'll give a specific example for us because we do investments. Now, on the fintech space, we did try to do the one-on-one, the bilateral engagements, and we realized it's not going to work. So we decided to take a macroeconomic approach and look at the Africa Fintech Network Association because they are aggregating. And what was critical for us is that they had brought on board seasoned professionals across the continent within these associations that run across 34 countries who are now leading and engaging the fintech sector and actors who tend to be the younger people. So that the things that are missing around governance, around even being able to pitch, and to be able to safeguard what you have developed, we are seeing a lot more professionals getting into that space, and I think that is exciting. So as the ecosystem looks at repackaging the digital space from the public sector, from the fintech sector, I think the interest and increased investments will happen.
Very quickly, FDI investments in our continent will increase. One perspective I will offer is that the issue with our markets is that there is a real gap between perception and reality. People make money in our markets all the time, right? And they do it well. There are many examples of success. So my suggestion and what I've seen work is get to network outside of just your immediate lane. Get to know people like, these are providers of capital. They've just come to Ghana. I hope you're going to go up to them after and be like, hi, I'm so-and-so. Great to have you. Form the relationships outside. Form the relationships outside of your markets. Because every time I show up on a global stage and I have the opportunity of going on to global stages the last, say, 15 years, I've seen where the Caribbean, Africa is very small, and I've seen Africa continue to grow and really develop. And I think that will help to reduce the gap between perception and reality because of fundamental, authentic relationships, and the money will flow. That's my thought.
Advocacy. Tell the story. Have the case studies there. Keep pushing out the narrative is the way it's going to work.
Stefan.
Yeah, we need more examples of African companies that have been very successful and ultimately, IPO or exit in a good way, and those African founders then reinvesting. It's the Silicon Valley story, which has been repeated all over the world. And we've seen some of it here as well, right? So there have been African entrepreneurs giving back, investing. So we need more of that, and I'm 100% sure we'll see more of that, 100%. Because the entrepreneurs we love are those that are, again, they're not waiting for anyone to pave the way. They will try to hack it, always. And so I'm 100% sure it will happen, and that will, again, we've seen it in Europe. Europe is maybe 10 years ahead, that's it, not much more. Of course, there's better infrastructure. Of course, there's a better start, right, in education levels, etc. So I think we as VCs also, as we enter the African market, I'm realizing in the last 48 hours, we also have a responsibility to invest into ecosystem building. And that could be just me spending more time here and just spending time with founders and with others. We're also talking with Elevandi about models to give back and to help build the human capital foundation here. Right.
Great. So you've heard it all. As you're sauntering to lunch, you need to grab them, tell your story. Tell the great African story. I have absolutely no doubt in my mind that if we tell the story right, Africa will be the solution to the world's growth problems.
Correct.
I am very, very, very passionate about that, and I believe strongly in that. And I guess that so do they. So we can end this by you giving them a good applause. We've been good at keeping you away from lunch. Thank you very much, Mr. Mino.
Mr. Reginald Yofi Grant is the CEO of the GIPC, together with his amazing panelists. They are yours for the applause. A group photograph. And although they've stated in clear terms the business case for investing in Africa, we still need to hear one last case about the state of fintech in Africa. That would constitute the closing remarks of the first Deputy Governor of the Bank of Ghana. Would you please make welcome Dr. Maxwell Opoku-Afare. The governor will join the selfie, please.
No, well, he's on my board, too.
Excellent discussion. Excellent discussion. Good afternoon. I think I have the tough job standing between you and lunch. So I'm going to be very quick at this. Ladies and gentlemen, it is indeed my pleasure to make a few closing remarks and express gratitude to all those who made today's session a reality. Today, we have exhausted a number of critical, game-changing discussions and innovative ideas, including the exploration of the challenges and opportunities in crafting regulations that encourage responsible innovation, protect consumer data, and address cybersecurity threats without stifling the growth of the digital economy. Also looking at strategies to encourage investment into technological advancements that drive economic growth and empower African communities. Also, we looked at ways of empowering the underserved. We've looked at balancing innovation, risk, and inclusion. We've looked at building a robust and interoperable plan, Pan-African digital public infrastructure, and also understanding the barriers as well as the opportunities in investing in Africa. Ladies and gentlemen, Africa is witnessing an unprecedented surge in fintech innovation, and the impact is evident. The fintech revolution has propelled quick access to credit for women in business and micro, small, and medium-scale enterprises, leading to improved financial inclusion and creation of jobs, wealth, and other opportunities across the continent, and also bolstering economic growth. This growth is driven by a mix of factors, including increased internet and mobile phone penetration, a young and tech-savvy population ready to develop innovative financial solutions, as well as a pressing need for even more financial inclusion solutions, especially for the untapped market segments. Today, we learn more about empowering the underserved and how stakeholders have explored innovative approaches to empower underserved communities in Africa by leveraging technology, entrepreneurship, and community-driven solutions to address the unique challenges faced by the marginalized in our society. It is therefore my fervent hope that these innovative ideas have been stimulated by this discussion, have challenged all of us to stretch the frontiers of the revolution. The discussions have challenged fintechs to design solutions geared towards further improvement of an all-inclusive finance. The discussions have challenged investors to invest in solutions that empower the underserved and unbanked in our societies. And the discussions have challenged regulators to implement supportive regulatory and supervisory frameworks to enhance financial inclusion in an enabling environment for fintechs to thrive without compromising on ecosystem safety. Having said this, ladies and gentlemen, the topic that I have been asked to focus on is the state of fintech in Africa from a regulator's perspective. This is an excellent one because the fintech ecosystem has become the fastest growing startup industry in Africa and has become the technological enabler of Africa's economy, allowing nations to leapfrog the more traditional banking infrastructure. It is no news that the mobile-based digital infrastructure has slowly given foreign investors more comfort to set foot in the African fintech space, enabling startups to scale up, as well as the establishment of Pan-African platforms such as the Pan-African Payment and Settlement System, PAPS. However, digital disruptors have often considered regulatory bodies to be their most significant stumbling blocks in churning out innovations within the digital space. I hope the Bank of Ghana's vision in collaborating with the Development Bank and the Monetary Authorities of Singapore through its subsidiary Elevandi to organize this summit, which has focused on innovation, investment, and impact in the fintech subsector, attempts to correct this view. While fintechs have made significant strides in Africa, notably in digital wallets, payments, and distribution, there is still room for expansion. I will therefore focus my remarks on some of the challenges confronting fintechs from a regulator's perspective and the essence to ensuring that these challenges are curtailed to enable fintechs reach their full potential. One major challenge confronting fintechs is lack of adherence to corporate governance practices. And this has resulted in the demise of some otherwise promising entities. High-profile instances of ignorance and misconduct with respect to governance have shown that fintechs will have to widen their focus and look at enterprise risk governance more broadly. Most of the regulators' requirements directly relate to having adequate controls for governance, risks, and compliance, which is key to enabling fintechs to navigate this fast-evolving and uncertain terrain, manage scarcity, and successfully reach scale and profitability. However, most startups struggle to align their compliance features with regulatory requirements due to the following misconceptions. One, that adherence to compliance is a costly enterprise. Two, that compliance is meant for only large corporations. And three, that there is no need to invest heavily in compliance if it does not generate revenue. Such misconceptions, when not addressed, will pose a challenge to the survival of any startup and may be detrimental to the entire financial system. Also, because fintechs can evolve rapidly, it is vital that they have a well-developed governance, risk, and compliance foundation, not just to comply with regulations, but to ensure their structure, processes, and operations are ready to meet investor and seed round requirements. Any fintech that has attempted to raise funds from venture capitalists and other investors can attest to this. One approach used by fintechs to navigate the challenges of regulatory compliance is the deployment and use of regulatory technology, RegTech. By the use of RegTech, many fintechs are pivoting towards compliance automation tools that deliver operational value, increase efficiencies, and decrease costs by transforming compliance into an increasingly integrated part of a forward-looking business strategy, thereby providing a better compliance culture in the organization. This will culminate into fintechs operating according to national as well as international best practices and standards that ensure potential risks are identified and mitigated timeously. Having addressed the need for fintechs to be concerned with regulatory compliance, let me now shine the light in-house on regulators. It is important that regulations keep abreast with the rapid changes in the ecosystem without stifling innovation in delivery of digital financial services. So here, myself included, regulators have the challenge to ensure proportionality in the way fintechs are being regulated. We need to strike a good balance between innovation and financial stability. And that is a challenge that we've taken, and it's a challenge that we're going to work on. In view of this, the Bank of Ghana has made a deliberate effort to continue to create an enabling environment for fintechs to remain compliant and thrive. For instance, the establishment of the Fintech and Innovation Office by the Bank of Ghana in 2020 to regularize the operations of fintechs, provide nurturing support, and enact policies that promote fintech innovation and interoperability in Ghana is one such commitment. The Bank of Ghana has also modified its regulatory approach to involve the fintech and payment industry and other relevant stakeholders in the development of policies and regulations relating to the digital financial ecosystem. These engagements propel fintechs to strive for compliance with regulations due to their involvement right from the crafting stage. Regulators of this space should therefore ensure that policies and initiatives geared towards the promotion of good corporate governance incorporates the peculiar characteristics fintechs possess. To this end, the Bank of Ghana continues to engage its regulated fintechs through its regular off-site surveillance and on-site examination on sound corporate governance practices, as well as the provision of training. An additional corporate governance guidelines designed specifically for payment service providers that ensures proportionality and also for electronic money issuers is in the offing and will help address poor governance issues. In conclusion, ladies and gentlemen, let me highlight the importance of encouraging complementarity between fintech and traditional finance institutions. One school of thought depicts that increased fintech activity can promote heightened competition and have the tendency to put pressure on the profitability of traditional financial institutions, which may respond by taking measures to inhibit fintech's market penetration efforts in order to maintain their margins. However, I am of the opinion that the increasing expectation of consumers and the rapid digitization of banking calls for collaborative solutions to drive innovation and bring deeper value to customers. Consequently, fintechs and financial institutions are complementing each other, and the results are efficiency in the delivery of financial services and lower operational costs. It is therefore in the interest of banks and fintechs to forge symbiotic business relationships, leveraging each other's expertise to deliver true and lasting value to customers of financial services. As regulators, we must continue to modernize supportive regulatory frameworks to promote such collaborations, as evident in Ghana regulatory framework that position banks as central partners in almost all fintech permissible activities, such as mobile money and inward money transfers. This has led to innovative digital payments, savings, credit, insurance, and investment products, leveraging on the strength of each institution. With these few remarks, I bring today's session to a close, and thank you for your participation and your attention, and I hope you enjoy the breakout session. Thank you very much.
One more time, help me say thank you to the first Deputy Governor of the Bank of Ghana, Dr. Maxwell Opoku-Afare. He has done nothing wrong. Please, a round of applause. And so coming up at exactly 3:45, an hour from now, we will have thematic areas in various rooms. In here, we shall have Fintech for Inclusion Forum. So all those who are so minded, make your way back here at exactly 3:45. For the Africa Dialogues on Digital Assets, yours is Hall 1. That is to my left, which is to your right. And then we shall have the Founders Stage. That's happening, I believe, in Hall 2 or so, yes. And then Women in Tech, Hall 3. 3i Africa Deal Room and Pitch Fest. Those who came to make pitches and secure deals, yours is Hall 4. Agriculture and Fintech Forum, yours is Hall 2. And so, ladies and gentlemen, after lunch, please check on the map, which is located in your app, unless you are using a YAM. May God help you. So you locate the various venues for your breakout sessions. Lunch is served for all our speakers. Yours is the VIP together with the speakers lounge. Your relationship persons will escort you to your respective areas. For all of us, we shall make our way to the tent which is outside for lunch. Lunch over there is sold. So please, it's not very expensive. It's highly subsidized by the organizers. So we shall reconvene here at exactly 3:45. Bon appetit, and I'll see you soon.
Oh, it's in.
Madam, receive now. Boss, select my bag.
Hey, here, take this.
She's
go to
coming.
I know. Go to the pharmacy now.
She's coming. Oh. She's here.
Pay faster, pay safer, and pay easy with Momo app. Download now and pay with the QR code, merchant ID, and so much more.
Oh my, oh. Everybody thinks my life just be enjoyment. Like you, I have to try over and over again to make it.
Yo, Kitty, waiting on a new hit.
Yeah, waiting, kiddie.
It helps when I don't have to worry about everyday stuff like banking.
New message.
So I can focus and make great music for my fans. Fidelity Digital Banking fills me with enjoyment.
Try Fidelity Digital Banking today and make it happen with Fidelity Bank, because together we are more.
Fidelity Bank. Believe with us.
When was the last time your mind had a break? I mean a real break, where you didn't constantly worry. Not breaks like being on the golf course but missing easy parts because you were distracted by failed transactions. Or when you're with family, but pressure from work prevents you from bonding with those you love. Or perhaps when meeting clients, but thoughts of system downtimes put you off your game. Well, we say next time you're on the golf course, focus on making par, get that birdie, at that family barbecue. Focus on getting the ribs tender the way Junior likes it. We process digital payments for your business. On your next business trip, soak in the views and focus on closing deals. We process digital payments for your business across Africa. Live, work, play a little without sweating over payments processing for your business with Insano. You are in good hands.
She's coming. She's coming.
Oh, it's in.
Madam, receive now. Boss, select my bag.
Hey, here, take this.
She's
go to
coming.
I know. Go to the pharmacy now.
She's coming. Oh.
safer and pay easy with Momo app. Download now and pay with the QR code, merchant ID, and so much more.
Pascal's showing his boss the efficient new technology they've installed. She is pleased, but now she's asking, why is that still there? Pascal explains that the wells can store many, many messages. The boss is not so pleased anymore. If you haven't upgraded your contact center yet, it's time to get business done better with MTN Business.
Araba, there are some people at the door. Go and tell them I have traveled to Russia.
Yes, Daddy.
Where's your father?
My father said I should tell you he has traveled to Russia.
Your father has killed me. I sent him money from America to complete my house for me.
Are all student association contributions?
Even the money from the fundraiser for Kweku's surgery.
Oh! He too? Don't be a victim. If you're contributing to a project, alumni dues, or any public campaign, Chango is your best choice. Chango keeps track of all donations and gives you the power to know exactly where the money goes. Chango is approved by Bank of Ghana. Call 0270-066-614 or visit changoapp.com for more information. Uncle, my father is hiding under the bed.
Oh, Araba.
Chango for your groupings and crowdfunding.
She's coming. She's coming.
Oh, it's in.
Red Hour received now! Boss, you like my bag?
Okay, here. Take this.
She's
go to the
coming.
I know. Go to the pharmacy now.
She's coming. Oh.
She's here. Pay faster, pay safer, and pay easy with Momo app. Download now and pay with the QR code, merchant ID, and so much more.
The role of women in fintech is a game changer. With over 60% of Africa's population under 25, mobile money and digital payments are revolutionizing the way people live and work, and women are at the forefront of this revolution. According to the World Bank, mobile money transactions in Africa reached $1.3 billion in 2020, with women accounting for 55% of users. A study by the International Finance Corporation found that women are more likely to use mobile money than men, with 62% of women using mobile money. Fintech companies are providing financial inclusion to millions of women, empowering them to start their own businesses and improve their livelihoods. The 3i Africa Summit is a beacon of hope for women in fintech, bringing together industry leaders and innovators to shape the future of finance in Africa. Join us in this financial and digital revolution to unleash Africa's potential.
Everybody thinks my life just be enjoyment. Like you, I have to try over and over again to make it.
Yo, Kitty, waiting on a new hit.
Yeah, waiting, Kitty.
It helps when I don't have to worry about everyday stuff like banking.
New message.
So I can focus and make great music for my fans. Fidelity Digital Banking fills me with enjoyment.
Try Fidelity Digital Banking today and make it happen with Fidelity Bank, because together we are more.
Fidelity Bank. Believe with us.
A great journey lies ahead of us all. And we all have different paths carved out for us. No matter who you are and the path you're on, make sure you choose a partner you can trust. A partner with integrity who will always give you the support you need when you need it. No matter what you do and where you are in your journey in life, you are very significant, and so is the path you're on.
Consolidated Bank Ghana, CBG, cherishes financial security as much as you do and shares the same values as you. That is why we are the right financial partner to stand with you. We are now one of the largest banks in Ghana, and we are ready to partner and work with you. CBG, we stand with you.
Pascal is showing his boss the efficient new technology they've installed. She's pleased. But now she's asking, why is that still there? Pascal explains the new fleet-finding darts are more accurate than the old ones. The boss is not so pleased anymore. If you haven't automated your fleet management yet, it's time to get business done better with MTN Business.
The role of women in fintech is a game changer. With over 60% of Africa's population under 25, mobile money and digital payments are revolutionizing the way people live and work, and women are at the forefront of this revolution. According to the World Bank, mobile money transactions in Africa reached $1.3 billion in 2020, with women accounting for 55% of users. A study by the International Finance Corporation found that women are more likely to use mobile money than men, with 62% of women using mobile money fintech companies are providing financial inclusion to millions of women, empowering them to start their own businesses and improve their livelihoods. The 3i Africa Summit is a beacon of hope for women in fintech, bringing together industry leaders and innovators to shape the future of finance in Africa. Join us in this financial and digital revolution to unleash Africa's potential.
Upgrade with your recoded GCB mobile app and do more with ease. Send and receive funds seamlessly. Your recoded GCB mobile app is fast. Use it to pay all bills and enjoy the convenience.
We're gonna be with you to make life a lot easier.
No worries. Top up on all types of ECG prepaid meters easily. Your GCB mobile app makes that possible with this smart card reader. Pay your subscriptions and fees to over 150 merchants. It is safe and timely. All transactions on GCB mobile app are smooth. Get onto Google Play Store and Apple Store to download GCB mobile app. Upgrade your style. GCB Bank, your bank for life.
The role of women in fintech is a game changer. With over 60% of Africa's population under 25, mobile money and digital payments are revolutionizing the way people live and work, and women are at the forefront of this revolution. According to the World Bank, mobile money transactions in Africa reached $1.3 billion in 2020, with women accounting for 55% of users. A study by the International Finance Corporation found that women are more likely to use mobile money than men, with 62% of women using mobile money. Fintech companies are providing financial inclusion to millions of women, empowering them to start their own businesses and improve their livelihoods. The 3i Africa Summit is a beacon of hope for women in fintech, bringing together industry leaders and innovators to shape the future of finance in Africa. Join us in this financial and digital revolution to unleash Africa's potential.
I want the world to see what is possible from Africa. Our clothes and our culture having a center stage. The beauty that is our food being made available to everyone across borders. Expand your business. Receive payments from all over the world. No limitations.
Oh, baby girl, let me send me I'll take you to the moon one of these days, Makume Mutofi. Anything for you.
Oh, Kocho. I also wanted to tell you something special. I think I'm in.
Hey, Masa, wouldn't it credit?
Get Gigi.
Masa, Jai didn't am for that.
Hey, small point at the camp score.
CBG is empowering you to get digi with CBG Mobile. Simply dial *924# and you can conveniently perform your banking activities. Transfer funds without hassle, top up airtime, check your account balance, pay for your utility bills, school fees, request for your cards, and many more.
Oh, baby, sorry. I had some small technical difficulties, so where were we? My ready.
Oh, darling, don't worry. I will always stand with you.
CBG, we stand with you.
Fintech is transforming the agricultural sector in Africa, providing farmers with valuable insights and tools to improve their productivity and profitability. Globally, investment in agri-tech and fintech solutions for agriculture has been increasing. The 3i Africa Summit is a key player in this timely movement, bringing together industry leaders and innovators to shape the future of food security in Africa. According to the International Fund for Agricultural Development, 60% of African smallholder farmers lack access to financial services, limiting their ability to invest in their farms. Fintech has the potential to increase agricultural productivity by 20% and reduce post-harvest losses by 15%. In 2021, African startups raised over $2.4 billion in funding, with a significant portion allocated to fintech and agri-tech sectors. Fintech platforms are playing a crucial role in providing access to finance for smallholder farmers. The 3i Africa Summit is a platform for farmers, fintech companies, and policymakers to come together and shape the future of agriculture in Africa. Join us to learn more about the impact of fintech on agriculture and how you can be a part of this movement.
She's coming. She's coming.
Oh, it's in.
Red Hour Recito! Boss, let's go back. Here, take this.
She's
go to
coming.
the I know. Go to the pharmacy now.
She's coming. Oh.
She's here. Pay faster, pay safer, and pay easy with Momo app. Download now and pay with the QR code, merchant ID, and so much more.
Yeah. The role of
The mics are on now.
fintech
Cool.
is a game changer with over 60% of
Ladies and gentlemen, if we could take our seats, would like to start very shortly. Do we have an extra mic? Do we have an extra mic?
Or more accurate than the old ones. The boss is not so pleased anymore. If you haven't automated your fleet management yet, it's time to get business done better with MTN Business.
If you have a colleague that's not here, send them a message, please, and ask them to come in. We're about to start, and this is going to be very exciting. So we want to make sure everybody catches it from the start. We're getting some technical issues sorted out. We're trying to turn some of our mics on. Hi, okay. All right, thank you. We're still waiting for a few more to come, but let's start interacting a bit. We want to make sure that before we get into the business of today, we reflect on what has happened before. And so we're building up as we go along. My name is Papa Akest. I'm going to be your host for the rest of the program. We're going to have some very interesting, exciting stuff. It's very important that as we run into this session, we try to be as inclusive as possible. And so before we start, I just need about 3 or 4 volunteers. We want to talk first and foremost about innovation. What innovations have you seen? And then I need some other volunteers to also talk about what you've heard concerning investment. And then we get into the business of today. So can I see by hand any volunteers who are ready to share? Any volunteers that are ready to share? I see somebody shaking his head there. Are you shaking it for me, or is it something else? Are you sure? So do you want to share? You don't want to share? Oh, who wants to share about innovation? What innovation you've seen since you came here, or you've heard, or what you found exciting when it comes to innovation? Hi. Anybody? Can I bring the mic to you? Yes? Okay. Can we give him the mic? Madam, please give the mic to George. He's over there. And then George, right behind you, I think she wants to say something too. So, no, you're looking behind, right? You, aha. Okay, George. Is the mic working?
Hello? Okay, great. So it's not necessarily about the innovations that I have seen, but the kind of conversations that we've had today, the need for us to talk to each other, the need for us to trust. One funny thing, I was sitting with one of the ambassadors who is a Cameroonian, and he's even surprised that in Ghana, banks are able to talk to each other, that MNOs are also able to talk to each other. He said that in Cameroon, it doesn't happen. But there's a need for this to happen because once we do that, we've leveled the playing field and there's good competition that could come off that, which will be good for customers. So that's my takeaway.
Awesome. Yeah, pass it behind you. Yes, great.
So I think the most interesting thing has been
one on the other side and one here. This.
You said financial inclusion twice, so we're going to get to that. Please pass it to the person on your left. Yes, you. Yes. So you can talk about investment. What have you heard about investment that's exciting? What do you think is possible based on the talks you've heard?
And to see the expertise, to see all the knowledge that we have here, it's just been amazing. Because I think we've noticed that over the years, with the economy not as it's been going, there has been like this surge to other countries. And so I'm from South Africa, and one thing I've seen is that there is a bit of panic around that. So for me, investment and seeing how investment is actually starting to work in the different sectors, whether it's working in education, especially technology, and how that is actually making people's lives easier. I think also when we're looking at access and the access that people are now beginning to have from the comfort of their own homes, I believe that will make it even more interesting and more attractive for investors to come to.
So we have a lot more going on that is attracting investment and attracting more people to go to Africa. Who would like to take the last one before we move on? We've had two men, so I want a lady. Keep it balanced. Any lady volunteers? All right. Any gentleman? The man in the blue shirt, I think he wants to tell us something. Yeah.
A good thing for us those of us in the fintech space. Yeah. Okay. Thank you.
Thank you very much. Being mindful of time, we're going to go ahead and move on. Hopefully the rest will join us as we move along. We are still unleashing Africa's fintech and digital economic potential. My name is Papa Akest, and we're currently in the Fintech for Inclusion Forum. We've talked about innovation, we've talked about investment, we've seen a lot of the conversations around that over the last 2 days. There's been a lot of other conversations around these same things, but yesterday I was running the Pop Vox and talking to quite a number of people, interviewing people, and the thing on everybody's mind, or the thing that keeps coming up is, the conversations are beautiful, the innovations are interesting, and we can see the potential for money coming in, but we want to be sure that there's impact. We want to be sure that the impact is realized. We want to see that impact. Now, in the found friendship between policy, finance, and technology, how inclusive are we going to be? In this forum, I want to implore both speakers and the audience and everybody else here that we stay authentic in our message, that we let people speak from the heart and be honest with their thoughts, and that we propose actions that can be adopted and challenge us all to pursue them. We'll kick the conversations off with somebody who's from a market leader. Opening remarks being given by the Group Chief Executive Officer of MTN Fintech, Serene Diom, and he's going to be talking about Fintech for Inclusion, pushing beyond innovation to impact. Ladies and gentlemen, let's give him a round of applause as he kicks us off.
Good afternoon, everyone. I see that people are having snacks or, or people have been tired for the whole day. I will try to be, to do my best to just maybe give you some view on. Today I would like to talk about, as MTN Group FinTech, what we are doing. And I will start by talking about our journey, where we are coming from, where we are today, and the perspectives that we have for the fintech business, but also for financial inclusion in Africa. So maybe just to start with some pictures, and for you to see that our mobile money business, which is our fintech business as MTN, has really grown in the last years and has become a Pan-African fintech platform and the largest one. And to get there, we crossed several milestones, and we really started very slowly and started with in Uganda and started building the business all over the year. And you can see that we also crossed a milestone with MasterCard investing into our fintech business. A couple of months ago, somewhere in March, we announced it. And also we separated the business, as I talked about it earlier, from the GSM business, and we've crossed a lot of milestones. But in the next slides, I will give you more details on really where we are coming from. We've started the fintech journey back in 2007 in MTN, where we launched our fintech business in Uganda. In 2009, we launched in Ghana and Ivory Coast, and after we launched more countries. And then we started, because when we started the business, it was mainly a wallet business where people were able to open a wallet, be able to transfer money to a wallet to another wallet, to pay bills, to buy airtime. And after we started putting more advanced services, starting with payment, international remittance, lending, insurance, and I talked about it earlier. And also, 3 or 4 years ago, we launched our Momo API platform, which is an open API platform allowing partners to be able to connect smoothly, faster, and in a secure manner with our open API platform. And also, we recently get the MasterCard deal, as I talked about it earlier. So we started building the business really in 2007, and now we have a business with more than 70 million users and with an ecosystem of more than 2 million merchants across our footprint, which is 16 operations. And we also achieved some milestones during our journey. In Ghana, in Uganda, we have really the biggest wallet platforms. We are the first, also largest Pan-African mobile money open API program, and also we are the platform of choice when it comes to lending. We disbursed more than $2 billion loans to our customers last year. So we've crossed a lot of milestones, and we had so many awards during the journey, but we think that there is a lot to come. And that also could not happen without the team that we have. So I'm here today in front of you presenting, but I do have a team of really capable people, a diverse team. If you look at the picture on your left, people on blue is my team centrally, but also the CEOs we have across the footprint. And you can see that it is gender-based. It is also people from coming from different environment. And that is very important for us, and we believe that we have one of the best fintech team in Africa, and also our objective really is to build the African largest fintech platform by African to serve Africans. So this is really what we are working on, and we are very, we are progressing on that. And also, when we look at the future and the perspectives that we can have, we are very about the future. We think that the future for Africa when it comes to fintech is bright, because African population is still growing and the penetration of fintech is still low. That is one fact. But when you look at also, when it comes to fintech penetration, I think the number which comes in mind is that 90% of transactions are still cash-based. So as I say, for us, we do not compete against any fintech. We do not compete against any bank, but we compete against cash. And our work every day is to identify the use cases that are still cash-based and see how we can digitalize them through our platform. That is very important. And when you look at credit, only 4% of penetration. So that means that a lot of people today cannot even imagine working into banks and thinking about even getting a loan. And for us, it takes 30 seconds to get to your app or your menu and to ask for a loan, and in 1 or 2 seconds we give it to you. And that is very important, and we think that there is a big potential that as MTN we are well positioned to seize. And also if you look at insurance, only 3% of penetration, and that is also something that we think that we are working on. We've partnered with Sanlam, which is the largest fintech, which is the largest insurance company in Africa, and we think that together we are building the largest insurtech business in Africa. So I have a video that I would like to show to you, which will just give some view on our fintech business, and maybe if you can have the volume, and then I will come back. Hello, valued stakeholders and partners of MTN Fintech. In 2023, we experienced solid growth, expanding the reach and impact across our fintech markets on the continent. Our commitment to innovation and focus on customer propelled us to new heights, driving tangible results and creating value for all stakeholders. A significant milestone was the signing of the commercial agreement with MasterCard and finalizing its minority equity investment into MTN Group Fintech, valuing our business at $5.2 billion. We are also encouraged by the sharp increase in the velocity of transactions in our ecosystem across our verticals, most notably payments, remittance, and bank tech. In addition to our ecosystem growth, we are pleased with our financial performance in 2023 in difficult macro conditions with robust revenue growth. MTN Fintech also made significant strides in the sustainability space by focusing our efforts on transforming the mobile financial service sector. An example of this during 2023 was being granted a payment service provider license in Cameroon by the Banking Commission of Central Africa. I want to also underscore the profound social responsibility that underpins our annual Open API Hackathon here at MTN Fintech. Not only does this event encourage the spirit of technological advancement and entrepreneurship, it also serves as a beacon of inclusivity, inviting diverse minds to the table to tackle pressing financial challenges. Our strategic objectives are underpinned by a foundation of responsibility, ensuring we combat potential fraud in the mobile financial services system. 7 of our 16 markets have the GSMA Mobile Money Industry Certification, ensuring safer, more transparent, resilient financial services. We are rapidly expanding our partner ecosystem to create an end-to-end platform connecting consumers to businesses and fostering business-to-business interactions. As we look ahead, the future for MTN Fintech remains bright and filled with opportunities to transform lives on the African continent. With your continued support and ecosystem partnership, we are poised to achieve even greater success in the years to come. Together, let's embark on this journey towards a more inclusive and prosperous future with MTN FinTech. Thank you. Maybe I'm better live. Huh? It's a Senegalese person speaking French and trying to express himself in English. It's a very painful exercise. So I think I talked earlier about our vision and how we're materializing it, taking example as Kafui, who is a Ghanaian lady living in Takoradi, and I think when we met with her, it was quite encouraging to see how mobile money or fintech, what we are doing in Ghana, is impacting her life and is impacting also the life of a lot of people in Africa. So I think that is something that I wanted to talk again about. And I talked earlier about our Open API program. That is very important, and it was a turning point for us because when we launched Open API, it was a shift of strategy from mobile money service provider to mobile money or fintech platform. And really, our ambition and our strategy currently is to try to enable everyone. And we have a platform where we have more than 70 million customers and more than 2 million merchants and more than 1.3 million agents. And really, we've designed APIs which can enable everyone and help fintechs to be able to integrate to us and to get access to that ecosystem. And to also be able to develop use cases that will be exposed to our customers and our ecosystem. And that is something very important. And we've tried to make it easier, faster, and convenient for entrepreneurs, for companies, for developers. So I think for us, we do not celebrate that much, or we do not communicate strongly on our achievements. But when you look at where we are today, we have more than 100 million of our customers who are registered in our platform, and we have more than 1 million agents and have more than 2 million businesses also who are also within our ecosystem. And that I was talking about, and today we are opening all this to our partners to make sure that our partners can access to that and develop some use cases on top of it. And when you look at the mobile money or fintech industry in Africa, and I think it is a very vibrant industry and which is growing, and you can see that in the last 3 years it is growing and it is still growing. And we need really, and if you look at what is important is the transaction value, how it grew in the last years, and it is encouraging, but also I talked about the potential earlier, which is even bigger. So I think it is worth investing into continuing developing the ecosystem and to really give to our people, our communities, the financial services that they deserve, to really push financial inclusion and to help people to be able to build their businesses and to be in the heart of everyone's activity financially. So really our view is that we want to become the financial service provider of choice and a platform of choice. And whatever people want to do as financial services, they can find it through our platform, with us directly or within our partners. So in terms of impact, we talked about it earlier, but we are making a lot of impact. And we gave a list of 15 use cases. I will let you read them, but for us it is very important to make sure that whatever we do, it makes impact and it helps also communities to get a better financial inclusion, to be financially included, and also to help them, to enable them to really increase the wealth of the communities. I think that is very important. to be an enabler to really increase the wealth of everyone which is in contact of us. So also, I think we are a fintech business, and being a fintech business, it is very important for us to be able to provide services that talks to everyone. And if you look at this slide, you would see that we are providing services to consumers, which is very important, but also we are providing services to companies, to SMEs, and that is also even more important, because SMEs in Africa are the vector of development, and they are the ones who are carrying the economy. And making sure that we enable them, we have a concept of grow, where we say we want to help SMEs to grow their activity by getting a loan to be able to have a better working capital, by growing them with an ARP to be able to formalize their activity, by also exposing them to our e-commerce platform so that they can have another channel to sell their product and services. So for us, it's very important to help people to grow and to be in the growth journey of SMEs. And as a technology company, we have started also using some new technologies to, to be better, to be more performant, and to create more innovation within our ecosystem. And some example is started working on blockchain, really to help the trust, and we're piloting it, and also using AI and ML to really improve our credit scoring to be able to give more loan to more customers, and also working on a one wallet concept to be able to anyone from everywhere to be able to send money to anyone to anywhere, and also to be able to pay to anyone anywhere in Africa. So we have some concepts that we are working on that will help really to shape the future of what we are doing. So just to conclude, just to say that we think that the future of fintech in Africa is bright, and we think that also there is a place for everyone to be able to contribute in that ecosystem, and we do not see people like competitors, and we see people more like partners, and everyone should be able to collaborate with MTN to build a better future for Africa, and to drive more economic growth for Africa, and to help our communities to increase their wealth. This is our purpose, and we will continue working on that. Thank you very much for your time.
Thank you very much. One key thing that I picked from his presentation was the importance of connecting all the central banks across and making sure that they're interoperable. And we're looking at some really exciting stuff. We're running behind time, so we're going to be trying to move along very quickly. We're going to invite our next speaker. I hope that our panelists are also ready to go right after. So the next speaker, who's basically going to set the theme for why we're here, is Dr. Patrick Conte, Chief Executive Officer of Africa FinTech Network. And he's going to talk about something that resonates with me deeply: leaving no one behind, deepening financial inclusion across Africa. Please, ladies and gentlemen, with a round of applause, let's invite him.
Thank you, Mr. Moderator. Good afternoon. After lunch, day 2, so naturally we want to keep it short. I'm meant to set the stage on the panel that is coming up on financial inclusion for all. I think we all will agree on one fact, that since yesterday, from President, Governor, panel, there has been a lot said on financial inclusion. The numbers are very clear. So it's like, what else to say? So I would like to list my remarks, these opening remarks, on a short theme which I have entitled Financial Inclusion at the bottom of the pyramid. Essentially, for the panel to look at the impact components of the 3I Summit, the I, the impact. How do we, Ghana officially says financial inclusion is about 80%. So about the 20%? What sort of interventions do we need to bear to ensure there is impact at the bottom of the pyramid? Interventions that will create not only inclusion financially, but most importantly, economic inclusion. Interventions that will create the economic opportunities for people to really make money, make business, generate funds that will help their lives and livelihood. So the session, I will encourage the session to lay emphasis on discussions around poverty alleviation, creating economic opportunities, investment opportunities, because it's only when financial inclusion becomes economic inclusion, then the impact is felt and sustainable over the long term. Also, I'd like to briefly comment on the issue of the digital divide, which has been covered here as well, the gender dimension to it, financial inclusion for women, for youths. Importantly, financial inclusion for the rural settings, the informal economy. How do we ensure that what is happening in the informal sector is reflected in the formal economy? How do we ensure there is inclusion, economic inclusion, not only in the urban centers, but most importantly in the rural settings, the villages, the village settings. This is where the crux of African economies lie. We also want the panel to look at issues about the cultural and social norms. There are still cultural barriers in some jurisdictions or in some environments. Women are not allowed, or the girl child is not allowed to go to school. How do we address those over a long time in terms of changing cultural values, cultural norms, social norms that inhibit or are serving as barriers for women going to school, women in finance, women in tech? How do we importantly look at the downside of digital finance? And one of the downside of digital finance is the heightened scale of risk, the vulnerabilities in financial services. How do we ensure there is awareness, there is education, issues about financial literacy, digital literacies? How do we create awareness about fraud prevention, detection, and remedial actions? This is how, over the long term, we can sustain financial inclusion. Also, is the important issue of the human capital development. I think yesterday in the morning sessions in Capital Meet Policy Dialogue, one of the key presenters was presented on the theme of the emphasis on capacity building, the emphasis on creating knowledge, and the argument being that it's actually human capital that precedes financial capital. We all clamor for money, we all clamor for the finances, but if the human capital component is weak, whatever finances that will have been raised cannot be sustained over the long term. So again, we want inclusion discussions that will look at how do we harness Africans' human capital potential. Lastly, to wrap up these opening remarks, is the important issue of collaboration, which has come out very, very, very clearly. How do we encourage the key stakeholders, government topmost, the regulators, the policy makers, the incumbent financial institutions, the fintechs, the tech people, advocacy bodies like the African Fintech Network, which I represent as CEO. We lay emphasis on cooperation and collaboration of the ecosystem. The only way there can be inclusion for everyone, in the village, in the urban centers, across board, gender-wise as well, is by cooperation and collaboration. Cooperation and collaboration among key stakeholders, financial institutions, development financial institutions, because it's only through cooperation and collaboration can we define the problems that are specific to the context and solutions that are not only immediate, but solutions that are long-term. So I would like to encourage the panel that is coming up to look at financial inclusion at the bottom of the pyramid, and how do we, as Africa, really use financial inclusion to mitigate the issues about endemic poverty in the continent. Thank you all.
Thank you very much, Dr. Patrick. I believe you've set the tone beautifully. If I could get anything from what you've said, we have to be very intentional about being inclusive, look at the bottom of the pyramid, and ensure that the tools that are being used are given access across board and it's balanced. Alrighty, so we're going to move into some panel discussions, and I believe this is where we're going to unearth some of the solutions that can get us to create the impact that we want to see and ensure that we are intentional. The next panel discussion is on digital micro-pensions services for an equitable and inclusive world. Our moderator for this session is Parul Seth Khanna, who is the co-founder and director of Pinbox Solutions. Ladies and gentlemen, with a round of applause, let's invite her to the top, to the stage. Just sit at the end. Want to sit? Oh, okay. Apparently they said. Okay. All right. The rest of the panelists, please sit according to the way your pictures are displayed, requested by the technical people. So I'll start with Angela Mensah-Poku. Angela Mensah-Poku is the Chief Enterprise Business Officer for MTN Ghana. Let's encourage her, please.
Encourage me.
Next, I'll invite Emmanuel Awuku Dabanu, who's a lawyer, health promotion specialist, pension consultant, and part-time lecturer, as well as he's with the National Pension Regulatory Authority. Thomas Asampong, head of microinsurance, Prudential Ghana. And then finally, Sakib Nazir, Chief Executive Officer, People's Pension Holding. Interesting. So the good news is we have very great panelists, but the bad news is I have to shorten your time by 15 minutes. So we can only give you 25 minutes. Please. Okay.
All right, we'll do the best we can. Sakib is gone for his founders speak, so I don't know whether he'll be back in 25 minutes, but I think that'll give us enough time with our three panelists. Welcome all. Just to set the context, just by show of hands for all of you here, do you think that you have enough insurance and enough pension savings, or will have by the time you retire? Just by show of hands. How many of you do you think you are adequately covered? Okay, I see no hands. Okay, how many of you have a pension program and an insurance program? Show of hands. Okay. If I changed your occupation to a farmer, a seamstress, a hairdresser, a fisherman, a domestic worker, by show of hands, do you think any one of you will have insurance or pension? Okay, I see like 2 hands at the back. All right, so this is the problem that we're actually tackling, the tone that was set earlier. And I'm just going to set some numbers for you just to show what it is, just in Ghanaian terms. Population of Ghana is nearly 35 million as we sit here today. The elderly population is only 2 million, which is good news. However, the informal sector workers, that means people who work for themselves, constitute 80% of the population. The tax-paying population is less than 10%. So the less than 10% taxpayers cannot subsidize any kind of meaningful social security for the 80% of the population who is uncovered. The population of Ghana by 2050 is going to be over 50 million. And by then, the projected elderly will, by 2.3 million in 2025, will be 5.6 million by 2050. The insurance penetration today is sitting at less than 2%. The mobile money penetration is nearly 60% for an individual starting at age 15. If this is the DFS infrastructure that we're looking at, Emmanuel, I'm going to turn to you and the regulator first. I love this. What is it that we're looking at? What is the pension landscape, and especially the pension inclusion landscape, that looks like in Ghana?
Thank you very much, and good afternoon. The Ghana's pension landscape is governed by the Act 760, that's the National Pensions Act, and it established 3-tier pension scheme. We have the first and the second tier, which is mandatory for people in the formal sector, but voluntary for people in the informal sector, that is the self-employed people. Then we have the third tier, which is voluntary, which has a provident fund, as well as a personal pension scheme, upon which the informal sector are also catered in that. The first tier is managed by SSNIT, that is the Social Security and National Insurance Trust. And then the second and the third tiers are managed by trustees, licensed by the National Pensions Regulatory Authority. As we speak now, we have about 27 corporate trustees, 43 pension fund managers, In our pensions landscape, the trustees are the day-to-day managers of the scheme. Pension fund managers are advisors on investment to the trustees. Then we have the custodians. The custodians are the banks or financial institutions that keep pension assets. That's both the cash or the funds, investment, and then the assets. Then, as I said, the first tier managed by Sine, second, and the third tier. The third tier have the component of the personal pension scheme, upon which we have only few people, as you said, over 80% of the population are in the informal sector. So the question is, are they catered by any of the pension schemes, the first, the second, and the third tier? As at the end of the first quarter of 2024, the asset under management for the three-tier pension scheme is about 71.79 billion Ghana cedis. Out of it, the second and the third tiers, the second tier is the occupational pension scheme, constitute about 53.79%. And then the first tier, that is 17.89%. Then between 2013 and then 2024, contributors or active contributors on the three-tier pension scheme grew up to 2.6 from 1.3 in 2013. So we could see that the pension industry is growing. But the challenge we are having is the informal sector coverage. Majority of the people are in the informal sector. How do we get to them so that they can also enroll and contribute towards their retirement?
Emmanuel, I'm going to come to you, but just one quick thing, Samuel. Do you think there is role for a public-private partnership to have deeper penetration? You have MTN on one side, you have Pru on the other side. Do you think there is good merit to think of a public-private partnership to increase penetration?
Excellent. Because the private pensions, especially the personal pension schemes, need that platform. Mm-hmm. Those who are doing the private pension or personal pension schemes, they use the mobile network platforms in payment. Myself, I do one. I just sit at the comfort of my home and contribute towards my retirement. So apart from the first, second, and the third, which is the Provident Fund, and then the component, which is the personal pension scheme, I do it as a formal sector. So with that partnership, we can try as much as possible to educate the people and provide the enabling platform for people in the informal sector to also contribute towards their retirement.
Thank you. I think this is music to the ears. But coming to you now, Thomas, I think there is a long gap between intention and action. So while with the best intentions with everybody in the room, you want insurances, you want life and non-life. What has your experience been on the micro-insurance side, which can be easier sell to the informal sector, yet renewals in the schemes in terms of premium recurrence may not be happening. What is your view on the same?
Well, I think that is a very intriguing question. When it comes to persistency and retention, it forms a key component of insurance or insurance profitability. Like you said, there are many times where frequency and persistency or retention becomes declined because clients wouldn't want to renew or pay for their premiums. In this case, there are key measures that we have to put in place to ensure regularity of payment of premiums. You made mention of partnerships. I think that is very key. So we need a very robust third-party aggregator who will be very efficient in making deductions for people's pensions. So that is number one. And then again, there's also the need for us to regularly send SMS messages to these ones to remind them to fund their wallets even before deductions are effected. So that is also very key. And then again, we also need to do bundling of policies. Usually, it is very easier for customers to change when they are on just one exclusive policy. For example, those in the informal sector, if they have only funeral policy, they think, when am I going to end the benefit of a funeral policy? So the customers change automatically. Oh. But then if you bundle it with, let's say, an investment policy and with let's say, hospital cash and savings, that retains the customer because of the high level of satisfaction the person is going to derive from the utility of that product. But for this to become very efficient, there is also the need for us to do this in collaboration with key stakeholders. For example, we need to partner with, let's say, the MNOs who will help us in regular deductions. We also need a partnership with all the key stakeholders of the fintech environment and even the insurtechs. And I believe strongly that when these partnerships are done systematically and conscientiously, we're not just going to enhance inclusivity or to improve upon the penetration, but we're going to create the fintech enabling environment that is going to help us to accelerate at pace and at scale.
I think that's a very interesting thought on product bundling, and I will address it in a little more deeper fashion. But coming to the lady in the room, I just had to say it. See, telcos or payments form the backbone of any financial services product. Now, given insurance, there is a premium amount to be paid once, or frequency could be monthly, quarterly, depends on how the product is designed. However, for a long-term services product like pension or long-term savings, you're putting in money for 20 to 30 years and you're taking out money for 20 to 30 years. So you're looking at least a 50-year relationship on the payment side. What is it that telcos like you can do to create this fabulous platform where people can latch on to their financial services?
So I think my colleagues and my fellow panelists have mentioned it, but one of the things you need to have is some understanding of the behavior of your customer. And I don't think there is a better organization and also industry, such as the MNOs, to understand how people use their money, how people use airtime, what transactions they use it for. That insight will help us create the perfect product for the perfect segment, because it's not one size fits all. One of the things we have to understand is, even within the informal sector, we all have said 80% informal, but within that, we have 67% that are female-owned. And females have a very different criteria to the rest of the demographic. And so therefore, you really need to understand your customer and build that sense of trust. Telcos are in the pockets of consumers, our customers. We are there when they pay for school fees. We're there when they pay for doctors. We're there when we're sending birthday gifts. We're at every seminal milestone that our customers have. And so therefore, there's not a better channel in which to drive micro pensions, but that insight needs to come into the products and services that we give to our customers.
I think she's brought up a fabulous point on it's not a homogeneous group of informal sector workers, right? So within that, you will have people who will always be savers, and then there will be medium-term savers, and there'll be larger savers. And we're looking at a population which is right in the middle and say earns about $250 to $400 US dollars a month. And that is a large chunk of people who sit there in the middle, who have the capacity to save for long-term, short-term, medium-term. But coming to all of that, now she's picked up another fabulous question right here for you, Emmanuel, that while the telcos sit as someone who understands the customer behavior, understands penetration, takes care of other needs, however, before you get onto a platform, there is something called financial literacy. Now, you could be literate, but that does not mean that you're financially literate. So how is it that you as a regulator are making the right noise for people to understand financial services and hence financial education?
Thank you very much. The regulator is doing is putting on a lot of strategies to make sure that we at least explain pension product to the various people in the ground to understand, especially women, because majority of the people, as you said, are financially illiterate. So it is very difficult for us to just sell some of these formalized pension schemes. When you look at the National Pensions Law, the third tier, which caters for the informal sector, is also governed by the laws of the second sector for the formal sector, which is very difficult for us to go down there. For example, payment, how are we supposed to pay? So it took us some time for us to use technology to make sure that people can sit in the comfort of their home to do the payment. So what we are doing is that we go to the markets, explain to the women, we get them together. We have even women in pension. They will get them together. Then we act a drama on pension products to differentiate it from other financial products. You know, majority of the people in the market or the informal sector, because of some of the financial services which they have engaged later, and especially, microfinances that they contributed, and by the end of the term, they were not able to get their money back. It is very difficult for them to separate them from pension products. So we do all this to explain to them that the pensions are different from other financial matters, so they can do this and then save or contribute towards their retirement. We also make sure that we want to waive, actually, MPRA's fees for all the trustees who want to enter into the informal sector market, so that they can do a lot of, or they can channel their resources to financial literacy, to let the people understand the need for them to contribute towards their retirement. Also, a registration of informal sector or micro pensions, we want to waive that so that it can entice or encourage the trustees to do that. All these are the incentives that MPRA is putting in place to make sure that we can actually go to the ground and make sure that people who are not covered at any of the 3-tier pension scheme can also understand the need to contribute towards their retirement through the micro pension. And when they also retire one day, they can get pensions just like people in the formal sector.
Emmanuel, I wanted to get you in, but I'm just going to get Angela in first, just on a very quick question. He's brought up a very important structure on education, yes, but there is this huge thing on trust. I don't think I personally have a portfolio, yes, like a lot of you in the room. Hi, Sakib. But there is this factor on trust where I latch onto a financial product and I know that it's going to do as it promises. I will have access as it promises. Now here sits Miss MTN, and you are seen as this 800-pound gorilla in the market. So how is it that this trust fits so well for you as a super marketplace?
So I think I mentioned it before. This relationship between people and their phones is one that has an element of intimacy to it. And you also, Imam mentioned around people's experience with microfinance going bust. Even if you're doing susu or something, it has an element of trust. The great thing about mobility is the fact that it is in the palm of your hand and it's accessible. It is accessible, and even if you feel it's not, there is a place you can go to find out where it is. As we were talking earlier on, I was saying that you talked about education, but before we even get into education, we at MTN pride ourselves on being holistically African. And one of the things you have to remember is that we are a continent of God day, inshallah, it is well. So even before you start thinking about how am I going to convince someone to save towards 50 years, when they believe that they will be relying on their children, that is why I'm working. That is why I'm sending you to school, because you will be looking after me in my old age. The nearest thing to give them peace of mind, other than their children, who will look after them in their old age, or religion, or spirituality, or extended family, is the phone and their wallet. And you cannot underplay the importance there, because they know that if I put aside one cedi, we were talking about $200. $200 now, I mean, $200 is big money at the moment, right? So one cedi, two cedi, three cedi, when I look at my phone, I know it's there. I know it's not going anywhere. And so that intimacy is something that we have to build and use that element of trust that we already have to make sure that we widen the nets. We make sure that people have that peace of mind that ordinarily either they're not thinking that far or they don't have the trust in other vehicles.
Thank you. I've already been alerted that I only have 10 minutes. So, Sakib, I'm going to come to you. But, Emmanuel, I just need to complete, one question to you. She mentioned the importance of why people are not able to save for a 50, or they think about before they invest in a product of a long-term in nature. But one of the reasons why, with the best intention also, why people don't latch on to long-term products is because either they are underinsured, they're meeting their risk through savings, or because they do not have insurances. So not only when they go out and try and meet a risk or health problem, they eat up all their savings and they mortgage their future income through a very expensive loan. And this is because people are underinsured. So I wanted you to elaborate a bit more on the importance of product bundling, because insurance then creates a very important part to meet short-term savings and long-term savings goals.
Right. So thank you very much. I think product bundling is very important in every insurance institution because of retention and persistency of products. In terms of product bundling, what we simply mean is that you integrate one, two, or multiple products into one so that you derive more value from the single product. It has been in existence for a very long time. For example, if you go and buy, let's say, electrical gadget that comes with an insurance, that is a bundled product. Now let us distinguish this from an embedded product. Usually embedded product comes from two institutions who have merged their product into one. But with bundling, the two products or the multiple product is coming from just a single insurance company who is giving you the product. Regarding the benefit of the product, bundling, I think we can look at it from two perspectives. One from the demand side and two from the supply side. Now, from the demand side, one benefit to the customer is that it is very cheap and very affordable, because usually bundled products comes with a discounted rate compared to when you buy different unique policies from different insurance companies. So it is very economical and cost-effective when you obtain a bundled product. The number two is the convenience that is great for you. For example, when you have a bundled product, you only deal with the same insurance company than when you bundle different unique products where you're going to deal with different insurance companies, taking into consideration the administrative bureaucracies and red tapes. That is heavily reduced when you have a bundled policy. And number three is the one-stop shop that is also great for the consumer. For example, if I have a funeral policy that is bundled with, say, hospital cash and an investment, I'm able to obtain a high level of satisfaction from the utility of the product. And like I said, usually when the product is just a single product, the churn rate is very high. But when it is bundled, let's say savings product with hospital cash, where the buyer can have services the same day he purchases the policy, and where he can be engaging with his doctor at any point in time, there is a need that this person becomes more motivated and will continue to pay his premiums at all times. So bundling from the demand side is very good to ensure customer satisfaction. Now, on the supply side, it also enhances retention and persistency, like we said, because there's more likely that less people will churn off because of the satisfaction they are deriving from their products. In terms of cross-selling, now we have the customer already. So going back to the customer becomes an easier job for us. We just pitch the new product and tell the customer that it's bundled with it. And then lastly, it also enhances scalability in terms of distribution. For example, let's say Farmers Association, you want to bundle, let's say, index-based agricultural insurance with our hospital cash or our micro insurance. Now we have close to about 20 memberships, let's say, in one association. So if you are bundling our product with, let's say, the index-based agricultural insurance, we are having all these people coming on board, consciously or unconsciously, especially when the association buys on their behalf. So from the supply side too, it is a very good business venture for us when we bundle insurance products.
Right, so I'm going to quickly get Saqib in, and I have 5 minutes, Saqib, but I'm going to take 7. So, Saqib, you are the practitioner here. So you're interacting with the regulator. You are bundling products. You do use mobile money for better increase. Now, there is a cost to delivery of financial services, which can be sometimes prohibitive, especially in the developing markets. And those can be penalizing or cannibalizing the savings of the informal sector worker if they're not taken care of. And the only way that it can be taken through is through technology. So what is your play, sir?
That's a very interesting question. So yes, there are certain costs which no one can overcome, right? And even, unfortunately, in Ghana, our situation with the regulator, the regulator does not want any of those costs to be passed on to the customer.
Mm-hmm.
Although, in my opinion, there are certain inefficiencies in the existing system, which is structured around corporate pensions, which you cannot translate to informal pensions. But we made a decision to absorb those costs. So it makes it longer for us to recover or to make profit out of or the return. But it's something we're willing to do because of the need to have that impact. So it will, if it would have taken us 3 years to break even, now it will take us 5. Okay, so it's a cost we've absorbed, and I'm happy to do it for now, but I think it would be much more helpful if everybody, the regulator, maybe the mobile money operator, realized that this is not just normal use case. Of course, nothing is a normal use case. Everything is special. But I think specifically as a long-term product, which is going to have massive impact on the GDP of the country. Every country has been built on pension funds. Today, 80% of our workforce is informal, and only 5% of that informal economy has a pension. But if you could mobilize all of that, and today the only way to do it is through technology and mobile money, that would make a massive impact on the reserves that the country would have in order to develop infrastructure, and it would make it a viable business for everybody.
So, Saqib, what is not working on the ground, one thing, and one thing that is working on the ground?
I think what is not, everything is working in a nice way, that there is, first of all, a massive hunger in the market. People are not stupid. People may not be educated, they may not be literate, but everybody appreciates that there is a need, and they want independence, right? Lives are changing. We can no longer rely on future generations. Everybody wants to be independent, save up for themselves, have access to these services. They're jealous when they see formal workers retiring on pensions. Why not the market woman also? And they want that capability. So it's a heavy responsibility on us to make sure. And they have the money to do it. They don't have it in bulk, but they have 10 cedis a day, 20 cedis a day, which if we do not utilize, will get used for the wrong purposes. Sorry if I say it like that.
Mm-hmm. No, it's
right?
true.
So it's a responsibility to mop up the money for our good, for their own good. So from all angles, I think we have a winning formula. Micro pensions, micro savings, micro collections over mobile money, direct, no middleman, they are fantastic. What is not working for me, the biggest nightmare for me is what is this money going to be worth when people are retiring? Looking at the rate of inflation, looking at the rate of depreciation. If someone is going to save up for 2 years, 5 years, 20 years, and at that point, the money that we're giving back to everyone is not worth, or it's not going to help them, then really, but that's a macro situation that
But
we
that's
don't
also
have
like a
much
chicken and
control.
egg, right? So if people save, you get out the inflation, and so some sort of a stability fits in, like you said, all of the formal sector or developing countries work on pension assets. One quick question for everyone before I end. Angela, what the one thing that can be done for women and for youth? Remember, ladies in the room, you're going to outlive all the men sitting here. So, so you need to have adequate savings, or your husband may have, I'll take 2 more minutes.
You've already taken 2, I've given you.
So what is it that we women can do, and the youth, the one thing that needs to be done for better social security systems?
I think for the youth, it's easy. We have a role to play to gamify and ensure that the youth are thinking ahead.
Okay. And for
the
women?
future. And for women, it's the empowerment and building solutions that are tailored to their needs, not a generic proposition, product, or service.
Emmanuel, what is the regulator thinking of doing for women?
Yes, for women, we just want to give them financial literacy programs to make sure that they become aware of the need for them to contribute towards their retirement and create the enabling environment so that they can conveniently contribute towards their retirement.
Thomas?
Well,
Youth and women.
Well, so in the first place, with women, because that is very important to me, you know, Ghana is an agrarian country. We have close to about 65% of them into agriculture. One aspect of insurance that I've been neglected for far too long is when it comes to agricultural insurance. We have a lot of these women who are in today's industry, but they don't have a form of protection. So one key thing that we need to do to enable to scale up agriculture among women is to have a very robust agricultural insurance system that is going to serve as a protection for them.
I like that, solutions-oriented. Saqib.
Well, our data has shown that women are much more committed in contributing to pensions. They may save smaller amounts, but they save much more in a committed manner. So we, like Angela said, we are really exploring through data how we can build very specific products that anticipate the needs of these segments and provide them with the unique solutions that are required.
I agree with you. If you tell a woman, this hair oil or any hair oil is good for you, it's going to make your hair shiny, lustrous, long, and strong, she will do it as long as she understands it. Similarly, for long-term savings product, if a woman understands it, she will latch on to it because she's going to save for her family and for herself after, while the man is going to worry about a liquid lunch. So I think that's the thing. But just in terms of numbers, just to end the session, why this subject is so important. By 2050, there will be 1.4 billion people globally who will be above the age of 65 without any pensions and insurance savings. 8 out of 10 are going to be living in Asia, Africa, and Latin America. The World Bank and the UN says that the biggest reason for global poverty will be contributions made by the elderly destitute by 2050, who will be constituting for the poverty of the whole world. On that note, thank you very much. Thank you for all your work. I think takeaways, women, good technology, keeping costs down, bundling of products important to make it effective, a forward-looking regulator who looks ahead and gets the public-private partnerships going to increase scale, and of course, like I said, the 900-pound gorilla. This is the trust, this is the marketplace. They don't need to download any new apps or understand anything as long as MTN can provide with product partners and service them throughout their lives. Thank you so much for the session. I'm sorry if I overshot.
Thank you very much. No, the apology shouldn't be yours, it should be mine. I actually feel, I love to MC, but I feel very terrible right now because I'm doing two things. I'm getting in trouble twice. One, I'm keeping some beautiful people from their outing tonight, and they hate me for that. And now I'm also keeping some people from hearing some good stuff. That was some really, really good stuff in the data. Picture, okay. 2 seconds. Yes. And in fact, when I started walking up the stage and she started mentioning the data, the 1.4 billion people without pension, I felt like sitting right back down because this is some serious stuff and you want to give it more time. Unfortunately, we have some more exciting stuff coming up. And so we have to move on. Thank you so much. Thank you. So the next session, unfortunately, I'm the bad guy again. It was supposed to be 20 minutes, but we have to cut it down to 10 minutes because of time. That's the fireside chat. And this is on financial inclusion for Africa, innovation for the underserved. And this is a conversation between Dari Okuju, founder and chief executive officer of Onafrique, and it's being moderated by Juliet Wangui-Mena, Senior Policy Researcher, DFS Lab. Please welcome them on stage. Oh, they're only going to be here for 10 minutes. Let's give it up for them. Let's give it up for them. Let's give it up for them.
Everybody's tired.
Thank you.
Thank you. Is this on? Hi everyone.
So I think with 10 minutes, probably we'll jump straight into it. The session is on financial inclusion, innovation for the underserved. So right away, Dari, maybe you can tell us how On Afrique is, providing services that reach the underserved, solutions that address current problems, building on existing platforms, ecosystems across Africa.
Yeah. So maybe, as I explained earlier this morning, or maybe I didn't have time to go too much in details, but we are purely, can you hear me? Yeah. We are a purely B2B company. So we don't address directly the last mile, the consumer. And we work through members of our network. Can you hear me? Yeah. Mobile networks, banks, money transfer organizations, and a large group of enterprises. Now, in the enterprise, we break it down into two groups. The one that can implement an API, basically, and the one that requires a UI and UX. In that last group, we find a lot of small and medium businesses, really the shops, I would say, that you will find in the street of Accra, in Lagos, Nairobi, and so on. In that group, we're focusing our effort right now in Nigeria and Uganda only. In Nigeria, we have about 400,000 of those, and most of them tend to be young graduates, and unemployment driving them a lot, and they're calling them the POS in Nigeria. If you go there, you'll see. And this typically is one of few other services they do in the shop. But the POS that we provide is unlike the way you will normally think of POS in the shop. It's actually a profit center as opposed to a cost center. So they are allowed to sell and get revenue out of that. So we believe that our work for that group needs to continue. We believe that most of the Africa GDP is offline, and we have to continue provided connected devices that can increase the revenue that they make, but also bring new opportunities. So we will continue doing that. On the other group, we have a specific code focus on what we call the GDOs, Global Development Organization, because we have found that they are a great channel to reach the underserved that you're talking about. So organizations like One Acre Fund, Give Directly, Save the Children, a number of those, the UN, the World Food Program, leverage our platform to reach people. And that you have kind of crisis situation versus kind of more permanent situation. But we are able to support both. If something were to happen today in Liberia or in Madagascar, we have the infrastructure in place to respond in crisis mode. But for more longer-term program like One Acre Fund supporting farmers in 6-7 countries in East Africa, we'll also be able to support. So that's really, I would say, the first level of answer on how we address that group.
Yeah, and I think it sounds like it touches a lot of people, even though it's not the last mile. It's definitely impacting the kind of marginalized groups you've talked about, the women, the youth, those in the rural areas, even the internally displaced people. So maybe then coming to your own kind of operations and work, what are some of the barriers? We can talk about it from an operational perspective and even from a regulatory standpoint that you would want, that we think once addressed would increase your scalability, your reach, and be able to bring more out of the, alleviation of poverty.
Yeah, I still think the biggest thing we can do is to create opportunities. And we will not know how people actually take that opportunity. I don't know if I have time to tell you a story, but
please do.
When I used to work at MTN before I started On Afrique, and this is like early 2000, in places like Ghana, mainly Nigeria, it took a while for MTN to understand who the high-value customers were.
Okay.
If you just measure it at that time by ARPU, by average revenue per user, everybody thought this will be the big ogas, but you know who they were? What they call the call boxes. Yeah. So once we digged, it turns out the high-value customers, just look at by the amount of consumption that they were doing, were people who were reselling one call on the street. This is early 2000, right? So
what happened is opportunity got created for a number of people that we didn't even think about. I still believe that's what our payment infrastructure can do. It can create opportunity that people will use in ways that we have not even intended. That's why we just have to make sure it is working all the time. Reliability is very important. We are in a relatively low trust environment, so anything you do to chip away trust compounds. So you have to make sure that it's always reliable, it works all the time. Being real time is important. You have to make sure it's compliant.
Yep.
Because otherwise, it's just a matter of time before you take the trust away again. So you have to, and then you have to make sure it is at scale. And that's where, the cross-border and all the conversation we had this morning matters so much, because if you don't do that, well, the only people who really have opportunities are people in big markets, Egypt, Nigeria, South Africa, and so on and so forth. So I know, and today we talk a lot about the ESG, which has become a bit the framework to engage, and the G in ESG is very important. It starts with governance. I think if the focus of the governance of the company is not on this group, it's just a matter of time again before you just stray away. So that is important. But I think very quickly it goes into, how many women, how many kids, and how many people, it gets too mechanical too quickly, and I don't think there is enough room for imagination. Yeah. And I think that's what we need to guard a bit against, that we have to build we take it as our mission, that we have to build the infrastructure. It has to be reliable, it has to be compliant, and it has to be scalable. And then we trust the imagination of people, and the way they're going to take advantage of it here in Ghana may be different from the way they do in Madagascar or Namibia. But what I've seen in the mobile gives me a lot of hope that if we do just that, we will see a whole lot more inclusion.
Yeah, and that's an interesting point in that the partnerships look different in each country, isn't it? In this country, it could be run by fintechs, in another it could be run by MNOs, in another by bank institutions. I think a lot of it is governed by perhaps the regulatory environment, who has the market share, these kinds of questions. But when you talk about compliance and trying to scale into newer markets, the cost, I think, really trickles down to the people we're trying to reach, the underserved. How do you think regulatory compliance mechanisms, we're talking about governance, can be better structured to reduce that cost? I know it's quite a chicken egg, big challenge. Not really an answer to it, but just to get your thoughts as to how that can be addressed.
I do have strong views on this. First of all, I don't think regulators should try to go to price, which too often they try to do. The thing we have to make sure that, again, the very quickly we fixate on, sometimes we're like, the price of cross-border, is too high, but a good chunk of that price is the cost of the compliance.
Yes.
Yeah,
that is true.
So I think we mustn't always fixate on the price. I think we have to fixate really on solving problem, and people will make the trade-off. People will not just pay money because they feel like. They will pay money if they see value. So we have to focus on that. I think, for me, the question of the price can be dealt with the market, and this is at least how we think about cross-border ourselves across Africa. If you think about, how much it costs to move money globally, right? Somewhere, call it 7-8%.
Yeah.
How much it costs to move money into Africa, now somewhere between 9 and 12%. How much is move money within Africa, you're somewhere around 13 and 17%.
Quite high.
That was a few years ago.
Yeah.
Now, my view is if you create a good infrastructure with a marginal cost that is acceptable, competition will drive the price close to that marginal cost. And on our network, that's our attention. We want our marginal cost of producing, being able to carry this transaction, to be a couple of percentage at most. Which means that if we can do that, and that is available to players in Ghana, why would someone charge 12%? That creates immediately an opportunity for someone to charge 8%, and then someone else to charge 5%. So the way we like to think about cost here is really to make sure we do our part of the work, and that we understand and we drive down the cost. But the price, yeah, I will be careful in mandating or regulating that.
No, fair enough. I think that's fair. I think the point is made is that we are trying to bring the cost down. We need to look for value rather than, monetizing, going to the cent or to the. I think regulators need to take a bigger picture, bigger approach to it. And so I'll take a leaf from an earlier session where they said, a year from now, if we're back on this stage, what would you like to have
he wants
seen?
us out.
Yeah, I have one last minute, just the last parting. So what would you want to see a year from now on stage, assuming there's TI version 2? What does Onafrique have to say?
Well, it goes back to what I said this morning. I still believe that, we don't realize the progress we made in 30 years in telecommunication. That I could sit here and then I could just pick up my phone and call any number in this room. I've been part of actually seeing that on play, and I realize it's quite magic. And it's great that we take it for granted and we don't even think it's magic. I want the same for money. So I would like that when we get here next year, that I could pick up my phone and make a payment to any number in this room. And, so it may not be ready next year, it may not be ready the years after, but I do believe that if we continue focusing on the right thing, we will get ourselves there.
Excellent. Thank you so much for your time, Dari.
Very much.
Thank you.
Thank you.
This has been exciting. I think for me, one of the most interesting things is when he said that it's magic, and it reminds me of what we used to refer to as African technology. So those who know, you know what we mean by that. What we used to mean by that. Anyway, next, thank you so much. Next, we have another panel, and unfortunately, one of our panelists is out, and so I can reduce the time to about 20 minutes, because we have 3 panelists now. The next program is on digital banking and financial sector transformation in Africa. Insights and lessons. Insights and lessons. And this is being moderated by Matthias Krona, Managing Partner, Europe, Middle East, and Africa, Elevanti. These are one of the organizers behind the program. Let's give them a round of applause. Joining him is Kojo Owusu Ajiman, Chief Executive Officer, Paystack Ghana. People are too tired to clap now. The next one, Samuel Amano, Chief Executive Officer, Blue Space Africa. Now I'm wondering if it was my encouragement or you just have swag. Okay. And last one, Juliet Ongwe, Senior Soup Tech Specialist, Cambridge Soup Tech Lab. Am I saying it right? This lovely panel has 20 minutes.
Yeah, really.
Thank you.
Yeah, I'm so happy. we decided to expand it to 40, sorry, but no. Thank you so much for still staying on. I think we're gonna make, and we prepared a very well show. It should be very insightful on the one side, but given the fact that banking is quite boring, let's make it a bit fun as well, as it is the end of the day. And let's start with a round of short introduction. And ladies first, Juliet. So, okay, so then not. Sam, you're the first.
Ladies first, no?
Fine, I can go ahead.
Okay.
So I'm Juliet Ongwai, and I will start with a statement that my colleague always says, which is, we should not regulate something that we can't supervise. So in our conversation, we're hearing a lot about regulatory responses around expanding the regulatory perimeter, introducing new regulations, but that's then bringing a lot of frustration because supervision remains the same. So for us within the lab is working with financial supervisors to see how then they can also use these same financial technologies or emerging technologies that we are talking about to underpin their day-to-day processes. And we do that through capacity building. So we are based within University of Cambridge. So we have programs that then introduce them to data science and upskill them and build capacity around SupTech. And then we also walk that journey in terms of co-creating solutions, SupTech solutions that can help them bring efficiencies in their day-to-day supervision.
Okay, so that means from the topic we speak about, like digital banks, you are discussing that topic out of the angle of the regulator and the technological support to the regulator, so that the regulator can stay fit and proper.
Exactly.
Basically.
Exactly.
I love that. Yeah.
All right. Thank you, Matthias. Name is Samuel Amano, the founder CEO for Blue Space Financial Cloud and Blue Space Innovation Hub. Basically, we exist to unlock access to financial products, fintech products. We think the ecosystem needs more ideas and more product development beyond payments, beyond B2B payments. So how does fintech intersect with different verticals? Education, healthcare, mining, right? Import, export. So we basically saw a gap a few years ago, started by providing the first layer, which is the data center infrastructure, to providers, service providers, so your banks, your insurance companies. But we realized on top of that data center asset, they need to be profitable. They need to serve better suited products to their customers. And when you look at the speed of a fintech and the speed of a traditional financial institution, the fintechs move really fast. And the idea is, how could you bring that same agility and the speed to the incumbent so that they can compete? Because there's argument, obviously, MTN is going to eat my lunch, Paystack or Flutterwave is going to eat my lunch, but really, we're all here to serve and create financial inclusion, and we need a factory that can build these innovative products. So that's what we exist to do.
So your customer is the bank?
That's correct. The bank is our customer, the insurance companies are our customers, the fintechs are also our customers. The other side of the business is the innovation hub, where the talents are being developed, what we call FinSoft Fellows. So basically, you take a guy who's just finished university, they study computer science, they love finance, they love the technology